Very good morning to you all. We have this annual event, much awaited event, where India's 5 think tanks get together and discuss the implications of the union budget from their individual perspectives. Let me give you a brief background. And I did some exercise on this union budget, and I realized that union budget is a bit like an onion. When it is fresh, there is a take on it, and with every passing day, as it gets stale, the experience changes. So I told myself, what did the budget look like on the day after it was presented? And the best way of looking at that budget was probably the newspapers the next morning. And newspapers do provide a certain perspective. So I did some sample, and I did it in 3 categories. One, I looked at 7 broad headlines of newspapers. And then I did 7 broad editorial headlines. And then I looked at, because there were many economists and experts who were giving their views on the budget. Some of them are here. So I looked at 17 such headlines. So I'm trying to categorize these headlines under different categories so that we get a sense of what the budget is, so that we can kick off this discussion in that context and see what does the second layer or the third layer of that onion looks like. In terms of headlines, out of the 7 headlines that I picked up from general as well as the business papers, the vote goes to prudence. You have FM keeps budget tight, you have safe budget, you have Jaitley stays the course. Then you have got 2 headlines which suggest that the budget was advocating clarity, a kind of uncluttered understanding of what is happening to the economy. No fireworks, FM shoot straight. And then there is this headline, no nonsense budget. There's one headline which is purely political. It says, Jaitley's face, Modi's voice. Then there is one headline which is even more interesting, which brings in the demonetization, the Notebandi effect. It says, wooing have-nots, hitting have-notes. It's clearly is trying to soak the rich kind of a budget as a result of the demonetization. Let me come to the views. These are the headlines on the front pages, so that gives you a broad sense. The editorial views these days are not very much different from the front page headlines, but still there is a sense that you get, a different take you get. Once again, prudence takes the vote. You have, amidst uncertainty, some stability. Then you have another headline, no big shots, but fiscally prudent. Then there is a third one, no playing to the gallery. And then a fine balance. Then some editorials are looking at it as a conservative budget. It says, pushes the right buttons, but a tad too conservative. Then the second one says, holding the line, no big leaps. So a lot of disappointment there. Then the third one, there is a little something for everyone. Very condescending, so it almost dismisses the budget. Let us look at what the experts, economists have looked at the budget. And then I will start with the positives, which got the least number of votes. Not least really, yeah, least. It says, this is just what the doctor ordered. So this is the most positive of all the expert views that I read and scanned in the newspapers next morning. Then says, striking the right balance. Then the third one is consistent with fiscal prudence, broadly in line with that. Then the 2 kinds of headlines that I saw from experts was, one was suggesting that recognizing trouble and making amends. One says, steadying the ship. And the second one says, the Notebandi antidote. Then there is 3 articles that suggest relief and no harm done. The tinkering is in the right direction. It is a tinkering, so there's a lot of disappointment, but it's in the right direction. More good, less bad, nothing ugly. This is another suggestion. Then the third one is, no news is good news. Then there are two articles which I saw, which were amused, non-committal, and even condescending. More water for the field. Then there is one which is FM keeps the excitement alive. And the negatives, the largest number, the 7. What are they saying broadly? No real push for job creation. Not with a bang. No big bang reform. On a wing and a prayer. A conservative budget. Prudent in practice, extravagant in rhetoric. Caught in a political trap. Now, I must say that headlines are never a true reflection of what is inside the pieces, but it nevertheless gives you a sense of the range of the way the budget was looked at the next morning. So therefore, the questions that I have in my mind, and I would expect, and I would request all our panelists here to respond to probably the 5. Will the budget revive investment and growth? It's the obvious question. Has it taken the tax reform agenda forward? Number 3 would be, has the budget tackled the adverse impact of demonetization on the economy? And 4, does the budget address the twin balance sheet problems, or more precisely, the stress in the corporate sector and the banking sector? And finally, is the budget overtly political with an eye on the elections? What does it do to the political economy? Now, since I'm ending with this, and I have got Mr. Mehta, who is the president of Center for Policy Research. Let me start with him. Mr. Mehta, why don't you elaborate on the political economy of the budget and what does it do to our system? We can take 20 minutes, 15, 20 minutes. Sure. Yeah, sure.
Good morning. It's wonderful to see everybody here. And I feel a bit like every year at this meeting, all my co-panelists have been wearing ties. And I used to be the odd person out. So this time I decided to follow them. And the opposite happened. Much like the way in which narratives about the economy change. So what I'll do is just offer some remarks for 10 minutes about how might one think of the politics of the budget insofar as there is any, and what perhaps it means for the future. The advantage political scientists have over economists is twofold. One, that we can engage in a little bit of speculation because politics is contingent. And 2, we like conflict more than economists do, where in economics kind of all boats tend to rise kind of simultaneously. So the distributive questions are perhaps a bit more salient. I would begin by saying I think there are 3 large, background facts to keep in mind when thinking of this budget. I think the first, of course, the immediate political context was people were looking for whether there's going to be any, as it were, big bang follow-up to demonetization, right? And the blunt truth is that not only the government, but the economy also is very deeply tied in different knots. I mean, the room for maneuver isn't there. The big windfall that was supposed to happen from demonetization has not materialized yet and will not materialize, at least not in any visible, palpable way, right? A 1.5% hit to GDP. Dr. Mansingh has been vindicated by the economic survey, which is perhaps still more conservative in the estimate, should have been an unconscionable crime in any other political society, but it says something about the nature of our opposition, that it's not been more, in a sense, more of an issue. And I think one has to say this, I think both intellectually and politically, we are in a very, very uncertain era. I think everybody wants the budget to be about jobs. But very frankly, it's actually not entirely clear what people are expecting by way of intervention in terms of job creation. I mean, I think, if you look at the global debates intellectually, whether in the United States, whether in China, a lot of those debates are on a wing and a prayer. I mean, there is a sense that you do some things and jobs will follow. And reality is proving a lot more recalcitrant to the project of job creation. I mean, I think that just is a fact, right? So in that sense, I think if one were cutting the government some slack, one would say that the budget is happening in the context where actually the intellectual parameters of what needs to be done, right, are not that obvious, or at least as obvious as it seems to some economists anymore. And I'll just elaborate on that in a second. Right? The second big context is, of course, at one level, this budget emphasizes a general feature of Indian economic policy making, that despite some people proclaiming revolutions at every budget, there is more continuity than change. Changes, if they occur, are incremental. By and large, governments sort of, in a sense, have to balance macroeconomic prudence and populism. And one has to give credit where credit is due to most governments of India, except some episodes sort of late 2009 and so forth, that by and large they have not been recklessly macroeconomically imprudent, right? And that, I think, is for very good political reasons, right? Because nothing causes more political instability than macroeconomic imprudence. It's not just a kind of fetish with deficit numbers. Politicians fear inflation. Politicians also fear uncertainty. And in that sense, there is a kind of inherent conservatism actually built. Conservatism in the good sense actually built. And I think it should give people some confidence that whatever else Indian governments might be, they're not recklessly populist. They actually seldom have been. Right? I think the third sort of large kind of background fact, and I'll just kind of put this on the table in the wake of demonetization, which is that demonetization, one of the most interesting features of it was that it also signaled a decimation of whatever institutional integrity is left in India's public institutions. No matter whether you think it was a good act or a bad act, the process by which it was undertaken, the long-term damage it will do to institutional life, and you have to see it in a broader context, the way money bills are being shepherded through parliament, where if you ask the question, do we have, in a sense, confidence that the procedures of the government of India as we know them, right? And procedures is what gives the state credibility and stability. Will they be adhered to any longer? We don't have that. And I think this budget, in a sense, I think continues the trend of that kind of decimation. Just to take one small example, I mean, everybody used to rail about retrospective taxation under the UPA. If you think of what they have done to, let's say, investment in second homes in the housing sector, you can see it as a form of retrospective taxation, except it is on individuals, it's not on corporations and companies. So I think that ability of the state to sort of just make up stuff as it goes along, right? We were supposed to have more clarity in tax rates, and I don't mind a higher tax rate, frankly, for the upper income brackets. I'm not persuaded that they need a tax cut. But I think the idea that you keep using surcharges, the idea that you keep sort of continuing with cesses, all those kinds of institutional ad hocism is, in a sense, likely to continue. Now to the larger political story, and I'll just make two broad remarks on this. The first story, I think, has to be seen in the framework of state-capital relations in India. Right? The central political economy fact in any modern political economy is what's going to be the relationship between state and capital, or broadly what you call institutions of capitalism. Now, one of the more interesting things about this budget is the following. I think there was a perception out there, very rightly, that the last 10 years have been very good for Indian capital in one very specific way, which is that most governments have worked overtime to protect the interest of big capital, right? Think of what went on, particularly UPA 2, right? Big capital got everything it wanted. Sure, domestic interest rates may be high, but you can do external commercial borrowings. They got captive infrastructure, right? They got to renegotiate all the PPPs, right? Right? They cornered most of the credit from Indian banks, right? And that perception, right, that the state had become beholden to big capital has led to a fundamental crisis of the legitimacy of capital in India. Let's make no mistake about it, right? Okay. Now, that crisis was expressed in two ways. One, it was expressed in the anti-corruption movements. The fear of plutocracy is still an important political fear a government has to take into account. And if you ask the question why the NPA problem is not being solved, part of the answer is that the state does not have the political capital to renegotiate with capital in a way which allows capital to take haircuts because they're very afraid of a big political backlash, right? The NPA problem is not just an administrative problem of banking. The NPA problem is a problem of renegotiating deals between state and Indian capital, right? Now, here's the crux of the problem. The crux of the problem is that Indian capital has still not understood that the game has changed, right? Indian capital, in fact, I said it 2 years ago, that the Indian big capital and private sector has now the potential of dragging down India's economy. It is not the engine for change. It is still holding out for deals that are unviable. Just look at the real estate sector. Right? I mean, think of India's big real estate companies, Unitech, all of these guys who are supposedly declaring bankruptcy, right? Right? So, when people say, look, what's being done about stranded assets, NPAs, all of that, I think the government is stuck. It knows it has to cut deals, but it knows it doesn't have the political cover to cut deals. It will be accused of being a suit boot ki sarkar, right? And, you know, let's face it, I mean, you know, don't underestimate the crisis of big capital in India. When Mr. Ratan Tata has to grovel before Mohan Bhagwat, okay, tell me what it does to the credibility of Indian capital. Okay? Now that, I think, is the large background crisis in which some of the measures in this budget need to be undertaken. I think the signal that the focus is on small and medium enterprises, that they got a raw deal, right? That they are the ones who need to be given a tax cut. I mean, it's amazing Indian corporates with a straight face coming with a begging bowl to the government again. Give us tax cuts, right? I mean, seriously, you look at their effective rates of taxation, right? Okay? So this budget is an important signal. The good thing about it, that the focus has to move to small and medium enterprises. Now, that does pose a political problem because it does leave the big problem of state-capital relationships still unresolved. And I will submit to you that I don't think it's going to be resolved anytime soon. I don't think Indian capital is in the mood for reform. I don't think Indian capital has the credibility, I don't think Indian capital has the commitment, and I think you will see Indian big capital still looking for exit options where it can find them. Okay? So that's the one central political economy fact about large kind of capital. The second, I think, large political fact is that the government has been competent, as I said, been macroeconomically prudent. It has also undertaken some structural reforms, although most of them are the ones they opposed under UPA. So it just underscores that that continuity. But the political establishment recognizes that it doesn't have enough to go to the electorate with a triumphal economic narrative, right? Demonetization, as I said, did not yield. I mean, you can't go to the UP voters and say, look, here's something demonetization did for you right now, right? That supposed windfall gain that was supposed to materialize did not materialize and was, you know, it should have been clear from the start was not going to materialize, right? Job creation is extremely tepid, extremely tepid, right? So there is no triumphalist narrative that the government actually has available, right? In that sense, I think the government's caution, to me, signals it's also stuck. It's not quite sure where to move now, at least on the economic front. And when you're stuck, I think it's prudent to be prudent, right? At least after giving the economy one shock, don't try and do something that in a sense is reckless. But the fact that it is stuck, I think, means that the political space is actually going to open up again. It's not surprising that the UP and Punjab elections are turning out to be quote-unquote normal elections. We don't know what the result is going to be, but they're normal elections in the sense that they're not subject to any waves, they're not subject to any kind of triumphal single-minded narratives, and in fact, the BJP is very much keeping all the balls alive, you know, in terms of low-level communal mobilization in UP, you know, discussion about sort of anti-Romeo squads, all of the normal sort of panoply of mobilizational techniques, right, are going to be, we are back to politics. I would submit that if the economy continues this way, right, you're probably going to be back to, I think, 1977 actually, in terms of both how the state has just reacted on the economy, but in terms of what kinds of coalition forces are actually going to emerge to oppose the state. So the political field, I think, despite Mr. Modi's personal popularity, is going to be extremely open, and I think this budget is a signal of that there just ain't no triumphalist economic narrative at all, which they can actually take to the public. Last and final comment I'll just make on the, you know, on the politics and sort of institutional side, which is, you know, we can talk about lots of sort of different aspects of the budget. As Yamini has written, I think in the social sector, by and large, there's more continuity. In fact, there's almost kind of a stasis, right? Now, to my mind, that's not good news for the Indian economy. On health and education, this government is a walking disaster, like previous governments have been, right? And if you want a competitive India, not just a competitive India, but if you want to make economic impact on the ground, right? Inflation in these two sectors is the highest. People's sense of well-being is measured, I think, most now probably in terms of expenditure in these two sectors, right? The continued and unconscionable failure even in year 3, right? In fact, I'd go further. I think there is, you know, despite Mr. Jaitley's announcement of UGC reform, if you look at every single action this government has undertaken in the last 3 years, it's a net decimation of Indian higher education, right? So it does signal, right, to me that I think their priority is going to, in a sense, not, as it were, they don't see health and education as long-term building blocks of a competitive economy. The calling card for 2019 is going to be the housing sector. Right now, the housing sector, the politics makes perfect sense. Everybody wants their own home. It could potentially give a stimulus to the Indian economy. It's extremely popular. I mean, sort of whatever little evidence we have. And the big push to housing, low-cost housing in this budget, I think to me indicates that for 2019, this calling card that we gave everybody house, and by the way, that's again a continuation of Indira Awas. Probably you would have been in the same place with the UPA, but all construction is actually going to be the only sort of calling card I think this government has, right? But here's the political question to ask. Almost 3 years, 2.5 years into this government, you are still dependent on the state expenditure to be pulling the leading strings of the Indian economy, right? I mean, this sounds like back to 70s. You know, we thought we'd left that behind in 1991. If that does not signal a political and institutional failure, I don't know. And I don't see anything in this budget that will help overcome that, at least in the next 1.5 years, 2 years. Best case scenario for private investment pickup is probably 2 years, right? Which means, last point, that you will get lots of social conflict. Brace yourselves. In India, we don't see it because it gets itself expressed in different ways that we don't often relate to the budget directly. But you have all of the Northeast burning right now. The fact that you can have Jat agitations, Jallikattu, all of that, right? It's to me a sublimation of an underlying disquiet that is not being channeled through the political process, right? And the fact that we are not recognizing it, and the budget is not even recognizing it, does not bode well for social stability over the next 2 to 3 years.
Thank you. Thank you. It's a very somber message, probably bringing us down to the terra firma. Since you did not take your full allotted time, let me ask you 2 quick questions. If the new narrative on the state-capital relationship is what you have outlined so well, what does it mean for this government's Make in India program, which is largely dependent on the big business coming forward and expanding their space? That's number 1. And number 2, as a political scientist, do you fear or foresee some sort of miniaturization of India's big business? Because the focus is on the MSME sector, and there is a built-in incentive for the big business probably to take advantage of the situation of an incentive in the below 50 crore category. So big business is not good, so therefore become small. So as a political scientist, what's your sense?
So 2 questions. So first on the narrative, the Make in India question is a very good question actually. So look, like with a lot of narratives in this government, there is a slogan and then there's the reality. And very frankly, the actual signals are very contradictory to the slogan being pronounced. So just take this budget, right? So you have this big digitization push, right? Now, whatever you may think of digitization, creating a cashless digital economy, right? You want all of these machines to come up, ATM machines, pay points, all of that, right? How are you going to do that very quickly? You're basically going to import them, right? Make in India? You've just given, you're going to announce with great fanfare, Apple setting up a, plant in Karnataka, right? Right? With the most unheard of concessions that you are actually, in fact, the whole point was supposed to create a regulatory level playing field. We are now back into a world where, hey, gee, I want Apple in, I'll give them some concession, but Samsung was here of its own accord, so you will get penalized, right? That's right. So, Make in India is not, I don't see a regulatory framework under Make in India. Now, the buy-off with big capital is going to be defense. That's basically the state capital deal, right? Which is, these guys are not going to produce globally competitive products. These guys are not going to become the next, consumer-oriented multinational. These guys are going to, again, hang on to the coattails of the state, right? Right? Through the defense industry, right? And that's that's in a sense the equilibrium. Big capital doesn't have that leadership anymore, right? It doesn't have even the icons anymore, right? So in that sense, I would not in this audience underestimate the social crisis that big capital is facing, because it also then cuts down the government's room for maneuver, right? Yeah. It's one thing to say we are helping a vibrant, clean capitalist class interested in reform. It's another thing to say that we are helping a class that basically is the first one to come to the state crying for handouts every time it miscalculates and misassesses risk, right? And I think the government is seeing that, which is why I'm not very optimistic that this NPA thing is going to be resolved anytime soon. Because this much any politician understands, right? A 2% haircut to company X is not going to make for a very nice headline in the newspaper, and that's where the negotiation is stuck. Otherwise, it's not rocket science, right? You just get a bunch of negotiators, you figure out, what makes a project viable. But so it is like with China, right? In some senses where you can say there's a structural contradiction between the interests of the party and a kind of debt-fueled economy. There is at the moment, a insurmountable structural contradiction in state-capital relations in India, and it's not going to be easily resolved, right? Which is why I don't see the private sector sort of, I think that great institutional impediments to the private sector taking. Now, whether they can arbitrage this kind of miniaturization thing, I suppose it depends on the industry and the cost and economies of sort of scale, a scale thing. But I think, to be fair, the finance minister did say that at least on tax rates, you've actually brought the MSME down to the big corporates rather than actually giving them a big concession, whether that's true or not,
Going by the effective rate.
Right, effective rate. I mean, that arbitrage possibility always exists.
Okay, thank you. I think it's getting more serious. Let me now turn to Mr. Rajat Kathuria. He is Chief Executive of NCAER, and I understand he will make a presentation. Rajat? Yeah. 20 minutes? Yeah, 20 minutes, yeah.
Thank you, AK, and thank you, Pratap, for that wonderful characterization of the political economy behind the budget. What I'm going to do is I'll kind of drill down into 3 or 4 sectors and then kind of give the overall narrative. If one were to look at what Pratap said about the kind of ticking social conflict, one might add inequality to that, and therefore the lack of job creation in the economy. So I'll refer to job creation, but I'll start with trade. I'll go to job creation, manufacturing, cashless, and then talk a little bit about the tax reforms that both AK and Pratap have spoken about, and what we need to do to get tax reforms in place to increase revenues for the government to release or increase the fiscal space for the Make in India or for the increased investment program. Okay, so since, the usual way that we do this is Rathin goes first and talks about the macroeconomy. Since Rathin is not going first and he's probably going to go last this time, let me just spend a minute on, growth. And of course, we've seen the economic survey where the growth has been, shaved off by half a percentage point on average. And next year, we're going to see growth of about, let's say, between 6.5 to 7.5%. Given that growth is going to remain subdued both this year and likely next year, the ability of India to grow at 8 to 10%, as was promised in 3 surveys ago, where there was a bright spot. Even in last year's survey, there was a bright spot that was beckoning there. But today, the bright spot is probably more subdued and smaller. From the size of a tennis racket, I think the size of the bright spot has shrunk considerably and probably is the size of a table tennis racket. The challenges, of course, are that there's subdued global demand, there's fall in exports, which I'm going to focus on in the first part of what I say. And then, of course, the threat of protectionism and Brexitism and Trumpism, and, of course, challenging environment relating to how do we recover from demonetization and how is remonetization going, and relating to that, how is the cashless economy going to cope with the challenges that lie ahead. And Pratap referred to that momentarily. So India's exports, to this audience, I don't need to say this, but India's exports have declined and have been declining for the last 2 years. For 24 months, there was steady decline, and the reasons are quite well. There's a pickup recently, but the decline are due to well-known reasons. One, of course, is the largest product category of our exports, petroleum products, saw a decline because of decline in crude oil prices. But we are much more linked to global GVCs than were global value chains than we were in the past. And therefore, a shock to trade results in a shock to countries that are participants in global value chains, wherein our participation has been affected as a result of the adverse import demand shock. There's a cautious attitude to becoming a part of mega trading blocks and trading blocks. And of course, this long-standing problem about domestic economic constraints and infrastructural weaknesses, which add to the costs of doing business in India. Of course, there is the question of whether our exchange rate or real exchange rate has been overvalued, and to the extent, what cause or what part has it played in declining exports. And we've done a study in NCAER, which I quoted to this audience last year, the elasticity of global demand with respect to our real exchange rate was slightly higher than 1. But current account deficit, due to the fact that our imports have fallen more than our exports, is in a happy situation, is in a not in a worrisome position as it was a few years ago. It's less than 1% of GDP. I've represented on this slide the major categories of products that have seen a decline in exports, and petroleum, as you see, stands out, but there are other items that have been affected: cereals, iron, steel, aircraft parts, jewelry, gems and jewelry, etc. So the export fronts looks a little worrisome, and there is no mention in the budget about what they're going to do to increase foreign trade or increase exports. Although one would expect that there will be a foreign trade policy which will be issued soon enough, and the budget could only do so much to address the problem of exports. But against the background of demonetization and against the background of falling exports, we have certain stylized facts in India which says that we're participating more in global value chains. Our participation, in fact, has been increasing, i.e. the backward linkages has increased, which means our import content of our exports has grown steadily over time, more in some industries, less in some industries, more in manufacturing, less in services. Nevertheless, on average, our participation in global value chains has increased. But still, our manufacturing sector hasn't been able to take off, and manufacturing has remained stuck at about 17% of GDP, and that has linkages, therefore, to creation of jobs. So growing integration, but at the same time, in global value chains, but at the same time, a manufacturing sector which has not picked up as it should have. And therefore, the focus of this government has been to try and boost investment in infrastructure, public investment in infrastructure, in railways, in roads, and expect that the multiplier effects on economic growth and job creation will follow. But the stylized facts on job creation and economic growth that exists, and that I will show you, do not portend happily on job creation. And the number of jobs that we have to create, the orders of magnitude are enormous, and you know that. But what is not often discussed in the media and the press is not just that 1 million or so that are coming into the labor force every month. It's also the fact that agriculture is going to shed jobs. So instead of those 10 to 12 million jobs a year that we need, we probably need 12 to 15 million jobs a year if we take into account the number of jobs that are being shed by agriculture. The budget does talk about trying to improve the trade infrastructure in states by announcing a package called Trade Infrastructure for Export Scheme. This replaces an existing existing scheme that wasn't doing too well, and it would provide incentive to state governments for infrastructure growth. The difference between the little that I could see when I delved down into the documents, what it envisages to create modern infrastructure as well as facilities of testing labs to try and meet the standards of products that we export in foreign markets. So it's kind of a new and restructured step to try and boost competitiveness of Indian goods globally. The FDI inflows, India has been very fortunate in the last few years that it's received one of the highest FDI flows anywhere in the world, including if you look at China. Last year itself, we received about $55 billion plus. So this has been positive for India. In fact, it's been one of the reasons why our current account deficit is in a comfortable situation. If you look at the cumulative FDI inflows in this century, over the last 15 or 16 years, we've got about 450 billion stock of FDI, and it's been steadily growing in the last few years, and we peaked at 55.46 billion last year. So FDI flows have been healthy, and this follows on the back of increasing the scope where FDI is permitted, increasing the equity stakes that are possible, going from 26% to 49 to 74 and to 100% in certain sectors, including in single brand retail and in defense. And one of the announcements, and I won't take you through what we've done in the past in liberalizing FDI policy since 1991, but one of the things that was announced in this budget was the dissolution of the FIPB. As you know, the FIPB has been clearing projects that don't fall under the automatic route. So, so 1 minus whatever approvals that were given in the automatic route went to the FIPB, the Foreign Investment Promotion Board, and there is a recommendation to dissolve this body because the number of projects that have been coming under the FIPB has been steadily declining, and the finance minister quoted in his speech that only 10% of FDI projects are cleared by the FIPB. Now, this chart actually gives doesn't give the kind of picture that I wanted to show you. It gives the absolute amount of FDI that has been cleared under the FIPB route. But if you were to normalize it by the total FDI inflow, which hasn't been done, and if that were done, you would see that there's been a steady decline in the percentage of projects that have been cleared by the FIPB. So it's probably a good step to take by the government to dissolve the FIPB, although there will be another body that will be set up to clear projects. But I think it's lived its life, and more FDI approvals are coming under the route of automatic approvals. Okay, so that's the first kind of characterization. Not much done for exports, a little bit for FDI, but it's an ongoing process. I mean, the budget can only address so much, and policy making is a year-long exercise, just like it will be with demonetization, which I want to speak about in respect of jobs, and then follow it up with what's happening in the digital economy. But as Pratap was saying, one of the impacts of demonetization has been on job losses, and there have been various estimates of the job losses. It's hard to predict what the exact estimates are. 4 lakh jobs have been lost according to one estimate. The one that has been discussed most in the media, both in television as well as in newspapers, is the job loss to the small and medium enterprises, micro enterprises, of around, I think the estimate was more than 40,000, and a 35% job losses and a 50% dip in revenue after the first month, roughly, of introduction of the policy of demonetization. So, companies that have been able to fortify themselves against the adverse impacts of demonetization, i.e. the big companies that could go cashless, haven't had such an adverse impact, but small and medium enterprises, smaller micro enterprises that were unable to do so have seen larger dips in revenue as well as in jobs. And there's more than anecdotal evidence now of people going back to their states, from Gujarat and from Maharashtra to Bihar and UP and Orissa. So there's, one can't dismiss this evidence as just anecdotal. So there's been significant job loss at a time when the structural transformation of the Indian economy, the growth model, wasn't creating the jobs. And I'll show you, although Indian data on jobs is awfully dated, I'll show you that even in the past, the elasticity of job creation with respect to GDP has been very, very low. So the number of jobs that we've created, even despite growing very fast, has been low. And then on top of this comes this impact. So job creation, I think, would be a make and break as we move forward for the economy, if not for the government. And the reasons are well known why these job losses have taken place. As I said, India is an informal economy. Most of our employment is in small and medium enterprises. They've been hit the hardest, and therefore job losses have been significant. Although we don't have a robust academic scholarly number that we can say, okay, these are the number of jobs that have been lost. The reasons, of course, there's been restrictions of cash withdrawals, there have been cash flow problems, inability of banks. I mean, you've got the resource that can be deployed either in giving out money or in, evaluating loan proposals. So the resources have been suboptimally, in fact, deployed towards, cash in and cash out, and therefore not enough loans perhaps given by the banks. There's uncertainty, and of course, as everybody has discussed, there's been not enough preparedness prior to demonetization and when it was introduced. Now, remonetization, of course, has begun to happen, and but before I get into what that could do for the economy and what the budget, what the proposals are in the budget, let me just give you a kind of stylized fact of the employment scenario in India, where we've pretty much, what this slide is showing you, pretty much that job growth, even in labor-intensive industries, has been not very high, has been minimal. Even in industries which are supposed to employ large number of people, given our comparative advantage in labor industries, has been minimal. Employment growth has not kept pace with GDP growth. It's been much lower. That's on the left-hand side of this slide. And the services sector doesn't employ as many people as its contribution to the economy. And on the other hand, agriculture employs people disproportionate to its size in the economy, and the labor-intensive sectors have not created employment despite growth. And these are the 8 key labor-intensive sectors that have shown a decline in the rate of job creation. So jobs is going to be a critical issue for this government and in fact for the economy going forward. And as Pratap said, there is not much that you see. There are mention about Skill India, Digital India, Make in India, but how those will pan out, it's difficult to see at this stage. Okay, so I've spoken about trade, I've spoken about jobs and the inability. I'll tie it all together at the end. I'll try and tie it all together at the end. But one of the positive fallouts of demonetization has been with respect to digital payments. And the positive fallout that we saw in November and December as a result of greater uptake of digital transactions. Of course, it creates some risk, which I will talk about. I mean, these are these new Bheem apps, Paytm transactions tripled, and you know, you acquired. There was folklore in the Indian mobile industry. At one point in time, you were acquiring about 18 million subscribers a month at the peak in 2008, 2009, when it was growing the fastest. Of course, that didn't account for the duplicate or triplicate SIMs that individuals held. But similar to that, you know, Paytm users have been rising very, very rapidly, especially post-demonetization. Paytm and other apps, especially in November and December. But recent RBI data shows that as remonetization is picking up, as the cash is coming back into the economy, the rate of growth of digital transactions has actually declined. So if the intention of the government is to make digital payments pervasive, I mean, of course, the supply side, I'll speak about the supply side in a bit, supply side. There is an important behavioral change that needs to be introduced in the system as well. In fact, on a lighter note, there is an app that has recently been developed because Indians love to deal in cash so much that, you know, whenever you want to make a transaction, you take out a wallet and deal in cash, and 98% of all transactions are in cash. So there's an app developed on your screen. It will give you the feeling that you are dealing in notes. You can pull out notes of your mobile wallet and turn it into the account of the merchant. So rather than typing, you know, 160 rupees that I owe you or whatever, or scanning it on your smartphone, there's an app, just like Book a Chotu, remember? There was a space and Book a Chotu emerged during the days of demonetization. Here is an app that is emerging that will give Indians the feel that they're actually dealing in cash, even on their smartphones. Right? So, I mean, the point I'm making is that this is you need a behavioral sort of shift in trying to get digital transactions to become more and more pervasive in the Indian economy. It's a good thing. This is one of the positive fallouts of demonetization. One of the negative fallouts of not demonetization, of becoming increasingly digitized, especially in the financial sector, is the kind of risks that are introduced as a result of becoming more and more digitized in your financial transactions. And therefore, we'll need to manage our cybersecurity risks much better. And here, you know, all that Pratap said about the failure of our institutions in a capacity building, which he's been speaking about since ever since we've been having this seminar, or at least since he's been speaking, we desperately need to build capacity much more in this sphere than in other. And you know, the finance minister has allocated, I don't remember off the top of the head, the amount that has been allocated to building the CERT in India, but there is some amount of money that has been allocated to improve both the quality of the legislation as well as the quality of the enforcement, which will hopefully result in improving the deterrence of engaging in phishing, cyber theft, you know, identity theft, cyber crimes, financial crimes on the net. But believe me, these are going to increase. Already last year, there were 3.2 million credit and debit cards that were compromised of the public sector banks. And the number of incidents have increased by 350%, a number that was quoted in response to just quickly conclude, in response to a Lok Sabha question that Mr. Ravi Shankar Prasad answered. So the answers are in that response that he gave to Parliament. So digitization, of course, will help also, as the government is expecting and the finance minister has said, in increasing the tax GDP ratio in the country, and therefore allow that fiscal space for the government to increase investments in manufacturing, increase investments in infrastructure, trade-related infrastructure to create jobs. But I won't, take you through the entire slide here, but a couple of points I think are important and need to be, if not kind of immediately addressed, but at least discussed and become a part of the public policy discourse. One, that India's tax to GDP ratio is much less than its peers, even if you include the state share. The central share is about 11% in this economic survey and the budget 11.3%, but it's substantially less than peer countries that you want to compare with. Direct taxes ratio to indirect taxes is fairly low. And as you know, direct taxes, the inefficiency in indirect taxes because of their regressive nature is higher, the distortions are higher, but hopefully GST will address that. And the share of direct taxes in our total taxes has been falling, and in fact has been declined by 10% over the last decade. It's now about 51%, and it used to be 61%, and the share of direct taxes has actually gone down. And there's an interesting figure that is available on the CBDT website, which is that the cost of collecting direct taxes, and I'm making this specific point because in the next slide I want to share some thoughts with you about, what is the cost of collecting direct taxes, not on the department, but what is the cost of collection to the individuals, both corporates and individual taxpayers. While the total amount, absolute amount has increased of collecting these taxes, that is the administrative burden, in percentage terms there's been a decline, and that's good news. There's a decline in the cost of collecting taxes. But the cost to, and these are figures that Mr. Jaitley read out in his budget speech, basically saying that at the higher income bracket, there are very few taxpayers. And it makes interesting reading. 90% of taxpayers are people who pay taxes, which is about 36 million who pay taxes out of a 50 million assessee base that the CBDT has. You have 90% are in the income group of less than 10 lakhs. So, and this is the inequality that one was referring to. So what does it cost? You often hear that people in India don't pay taxes because the public goods one gets in return for those taxes. The quality of those public goods is very poor, and therefore there is no incentive for individual to pay taxes. And then you contrast yourself with the Nordic countries, etc. But have we done a study on what is it that it costs individual and corporates to pay taxes in India? There have been studies. There was a last study done by NIFPFP, and Ratan is sitting here, in 2002, which shows that the compliance cost of collection, both direct taxes or individuals as well as corporates, is fairly high. And it's higher than comparator countries. And what is it? This is not the tax that you pay. This is what does it cost you in terms of your time, in terms of your engagement with department officials, in terms of accessing the website. If you're filing online, do you understand the website? Do you hire somebody, etc.? All this forms a part of your compliance cost. And I think it's time that in India we did some study and made it public on what is the compliance cost of paying taxes in India. Because after all, Mr. Jaitley is making the promise that the tax department will become more friendly. Arvind Subramaniam in his economic survey calls the tax department overzealous. Mr. Jaitley says we want to become a more tax-friendly country. We want to get people to pay more taxes. So compliance costs must go down if we are to become a country that we can widen the tax base. Of course, digital transactions will help, because then it'll be much more difficult for you to evade paying taxes, because then everything becomes transparent. This is much more of the same, and the good news is that e-filing in India has increased, and 94% of all direct taxpayers, which is a small number, use e-filing as a method to pay taxes. But there's no correlation between one would expect that the compliance cost would go down if you do e-filing, but studies that have been done, not for India, but abroad in developed markets, show that there's not necessarily a monotonic relationship between e-filing and compliance costs. It's not necessarily that compliance costs will come down because you've gone online. And of course, digital infrastructure. So let me kind of summarize everything by making an overall remark that the budget is one document in the overall year of, in a sense, economic reform that the government is going to do, given how it's going to spread its resources in terms of how does it divide its times between fighting elections and focusing on the economy. To the extent that it focuses on the economy, it's like, to use a cricket metaphor, and Sujit will like this, if you've started reform, let's say demonetization, it's like, if you were to hit a 6, you have to have an excellent follow-through. I'm not talking about Dhoni, who doesn't have a follow-through, but all other batsmen have an follow through if you were to hit a 6. So once you've struck the ball, once you've demonetized, there has to be a follow through. And there is good news in the budget. There is this follow through, but the follow through has to go on beyond the budget. That's the point. I mean, the follow through in terms of reforms on campaign financing, in terms of digitized transactions, in terms of getting a cyber security legislation in place will be extremely important. All this has to, and behind all this, we need good capacity. If we are a capital scarce country in terms of institutional capacity, that problem is compounded in the cyberspace, because cyberspace is inherently asymmetric. The costs of perpetrating a kind of crime or in cyberspace is so low, the price, and the cost of preventing it is very high. So it's inherently asymmetric, and we need to get that space in order. Of course, DigiGao, so I won't talk about this, happy to address this in the question-answer session. The last point that I wish to make is on the first slide. Will manufacturing of hardware and electronics, which is a part of the Make in India campaign, will it take off, and what would GST do to that, given that the arbitrage that companies now enjoy on making in India will be gone with the coming in of GST. A special additional duty has been placed on printed circuit boards in the budget speech, and printed circuit boards are 30% of the handset value of the handset. And to increase localization, there's a special additional duty, and with the hope that it spurs the manufacture of printed circuit boards within the country. And Pratap spoke about Apple and Samsung, etc. So my last slide, the finance minister referred to transform, energize, and clean, the tech model. And in a play on that, what we need to do in an economic sense, not in a political sense, he used the word much more in a political sense, we need to transform the growth model, focus on manufacturing, labor-intensive manufacturing. The budget has kind of shown some appetite for investments in infrastructure, railways and roads, needs to be taken further. We need to energize not only the youth to get into the job market and skill them, we need to energize our economy with low-carbon renewable sector so that we can have low carbon growth, and we need to clean the institutions. But not only clean the institutions, we need to build a whole lot of capacity in our new institutions, the conflict between state and capital that Pratap was talking about. In order to manage that conflict in a transparent, accountable manner, you need to have strong institutions. That's a given. And we need to create clean, strong, accountable institutions, which have been sorely lacking, I think, in India. Thank you very much for listening to me. I'm sorry I've overshot.
Thank you. Thank you. Thank you. I thought I would penalize you by not asking any questions because of exceeding your time. Just two quick observations I would make. It seems that you are pretty pessimistic about the budget. You are saying there's no trade policy push. FIPB's abolition probably is cosmetic in terms of 90%, 10%. So what is the real change, really? Institutional change? We were saying, you even suggested that another institution will come up. Job losses, it's 4 lakh jobs, but budget has nothing. So taken together, I mean, is that the right way of understanding your assessment of the budget, that the budget has not done on trade and industry side, done much? Just quick response, please.
Yes, very quick response. I think I tried to answer that when placing the onus of, everything on trade. I said there will be a trade policy that would come out. So placing the onus of getting everything right on the budget would be impractical. I think overall the budget has done a good job in terms of managing the macroeconomic fundamentals and showing the push for infrastructure growth in rural areas. That's been the focus of the budget. And I wouldn't place, as I said, I wouldn't, addressing all our economic, the budget is not a panacea for all our problems. That's the point.
Okay, thank you. Let me now turn to the social sector, and we have the Director of India Development Foundation, Dr. SK Shanti. Please come and...
Good morning, everyone. Mr. Chairman. Sure. I'm from IDF, and traditionally, IDF has always focused on the social sector provisions made in the budget. And this year, of course, I realized that there is this huge overhang of demonetization, clouding the entire budget discussion. So let me give you my take on that upfront. I believe that social sector spending and any development policy oriented towards the social sector is not expected to have immediate impacts, in the short term. We expect the impacts to be accruing to the economy in the long-term basis. So that is one. And do I see demonetization as a short-term phenomenon? Yes, I do. And there is not much by way of what I have read in terms of analyzing the long-term impacts. So at least no, scientific proof. So therefore, I do see it strictly as a short-term phenomenon. And our own work that IDF has done in collecting data from the field level from various markets and mandis across India, it is several states in India, shows that there has been some impact on employment. So people are concerned about jobs. So, but the difference, there is a wide variation across the states. So in the small and medium sector, perhaps some job losses are there. And as far as prices of agricultural commodities is concerned, the surprising finding was that they were already trending downward when demonetization was announced. And therefore, we were not able to find any conclusive proof to say that demonetization has caused any further decline in prices. The prices were going down. Perhaps it was an agriculturally good, year in terms of good weather, etc. That was in favor. And the farmers also felt that, the planting and the sowing activities had also happened by December, and they had planted and sown perhaps the same amount, if not a little bit more. So even from the medium-term perspective, it doesn't seem to have had a major negative on agricultural production. But it's possible that some jobs have been lost, and our research is ongoing, so we will have more to say when the research is complete. So with that, let me now turn my attention to the provisions made in the budget itself. And I've already revealed my approach to this talk, which is that I would be interested in looking at what is the short-term impact, and also trying to analyze whether there is any possibility of seeing what sort of long-term impact the social sector spending over a long period of time. My period of analysis is 80-81 to 15-16, so it's a 35-year database. So I have done a little calculation, which I will present to you. So, as everybody said, this is one of those budgets where the theme of fiscal consolidation has continued. And is it a good theme? Yes, I think so. Did we go overboard in terms of being conservative? I don't know. It's possible that we did go overboard, but fiscal consolidation is any day better than fiscal profligacy, as we have learnt, and we have faced other crises before, and therefore we don't want to go there. So fiscal deficit has been brought down, has been contained. Revenue deficit is under 2%, good news. I'm probably treading on Ratin's toes out here, because he will be saying all this a little bit later. Expenditures, total expenditures are up by 6.6%. And if you see, there has been this fiscal consolidation has come as a result of containing expenditure, both on the revenue and the capital account. So there is an overall focus on containing the expenditure to meet the FRBM targets, and also now the review committee also has looked at it and has made fresh recommendations to the government, and I think the government has taken those recommendations from the experts rather seriously. Capital expenditure continues to be low. This is one of the weaknesses, but this is not a 2-3 year phenomenon. We have seen this over the last since 2008, 2009, when capital expenditure nosedived. After that, we have not yet seen any recovery in capital expenditure. So this whole expectation that the government will lead the investments and then it will crowd in private sector investment, etc., that argument went out of the window quite a long time back. So the government is not seriously investing in any asset creating activity. On the other hand, revenue expenditures have only increased. But the good thing, so fiscal consolidation to me seems like a good way to go. And the government finance minister did not get carried away with giving tax breaks either. That is also a good thing. There was this lot of demands from people that demonetization sufferings have to be compensated somehow, and the government has to give some breaks, etc. As an economist, perhaps, I would say that erring on the side of caution is better. So I would overall say that it's a kind of a commendable effort in terms of just balancing the numbers out, focusing on a few things, trying to give a boost to infrastructure. So if I just look at the numbers of the budget, I think it is a commendable act and also a very smart act. So now coming directly to the social sector, what are the proposals under centrally sponsored schemes that have got some noticeably additional funding? I have not listed all of them. And what I find here is that there are 2 or 3 major areas of focus. One area of focus has been the rural development side and agriculture, farm incomes, livelihoods. And the other major focus, I think, maybe to a lesser extent, health. So in health, there has been some focus. Education has not been addressed in this budget, but that was done last year. So this year, I think there has been some focus on health and hygiene and water and sanitation, which I think is good, because instead of probably spreading yourself thin across all the schemes, it is better to focus on a few things and see where that sort of a thought takes us. After all, so I told you right at the beginning that I'm looking at it long term, but budget is essentially a short-term phenomenon. The outside lag of fiscal policy is 1 year. So how does it gel? So at the best, what I can say is whether we have taken a step in the right direction. So we will come to that a little bit later. So every budget should add incrementally, but clearly on a long-term goal. Focus clearly on a long-term goal. So I will not, I'm not going into the provisions in detail. Many of you probably know more than me exactly what amounts are involved. So one weakness I told you right at the beginning, that this expenditure composition between capital and revenue has been extremely low. If you see these 2 lower lines indicate the capital expenditure as a percentage of total expenditure, and especially this is data relating to the social sector. And the revenue expenditures coming on top, and the states, the light blue line and the somewhat darker blue line refer to the state's allocations across revenue and capital for social sector, and the center's contribution is coming as the black line at the bottom, which is almost close to 0, and that is the center's contribution in terms of capital outlays to the social sector, and the center's contribution in terms of revenue expenditure to the social sector outlays come at the top as the white line. So you can see that the overall emphasis, and one might argue that social sector spending has to be necessarily revenue in nature, because you're giving salaries to doctors, you're giving salaries to teachers, etc. But we also need to create capacities. We also need to build schools. We need to build hospitals. Do we have enough hospitals? These are all some of the questions that also have to be asked simultaneously. So if you look at these numbers, you can clearly see that we do need to increase the capital spending in the social sector space. That is clear. And so what is the link after all? What do we expect social sector spending to do? The social sector spendings, we expect the first order effect to be that it will in some way benefit human development, especially because it is aimed at underprivileged people. Much of the social sector spending in education, health, etc. goes towards benefiting or is aimed at benefiting the so-called underprivileged, the poorer people, poorer Indians in India. So human capital, and also, so research has shown that this indeed happens in countries around the world, that social sector spending does contribute to human capital buildup and also helps in poverty alleviation and growth. And so why public sector, why can't the private sector? Well, with the usual argument that there are positive externalities, etc., which probably limit the investment of private sector coming in here. Therefore, public sector has to necessarily take the lead in this space. But now I would like to place before you, I am going to argue that we are not spending enough, number one. Number two, I am also going to argue that whatever we are spending is not having the desired impact. These are the two arguments, and with that I will leave you. So the debate is, can we increase the spending and hope for improvement at the grassroots level in terms of human capital buildup, in the sense that we see better educated Indians coming from, not from the cities, but from the villages and so on. Can we see that happening? Is it a question of numbers, or is it a question of governance? That the way we are setting up the delivery mechanisms to reach out to this population, right, it's somewhere missing the mark or somewhere missing the target. So with the result that year after year after year, we find that our HDI is low, this is low, we are not really performing well in terms of providing job-worthy individuals, providing healthy people coming from the rural areas, and so that is the broader argument. Is it this, or is it that, or is it both? So you look at the spending, we spent 7.03% of GDP on social sector. This is total spending by center and states put together. The OECD countries average about 22%, and that is public spending. It's not private spending included. They spend an average of 22%, and the highest is in France, which is one of the better developed countries of the world. It is upwards of 32%. That is government spending on social sector. So we are clearly, we are falling way short compared to other countries. And these are developed countries, and they are spending much more. So what has happened in this year's budget? Well, the social sector spending has gone up by 0.11%. So the question is then, if so the line of reasoning, I mean the logic from economic theory, what economic theory tells us is that you build social sector, you develop the social sectors, build up human capital, which will then lead to growth and poverty alleviation. We have growth, but is poverty gone? We have growth, but is it inclusive? These are the things that we need to ask, and inclusive growth is one of the things that I will make a comment on. So what is happening here? So I have done a sort of a calculation, so where I have asked a question of what is first of all, is social sector spending in India even related to the growth? Is it even causing GDP? So some econometric analysis went into it, and the sum and total of that is what I am presenting to you here as an impulse response function. So this is just a tool by which we see whether a 1% additional injection in the impulse variable, which is in our case is social sector spending, to what extent does it impact on the response variable, and which is GDP in our case. So do you understand, the 1% more spent on social sector, center and states put together, what is its impact on, additional impact on GDP? This simple exercise.
You have just 5 more minutes.
5 more minutes, yeah. Thank you. And the answer to that is, well, you can see in the diagram, this also plots it against time, right? So the impulse is given in time 0, and then you find that there's a sort of a spike. The response from GDP goes up and then it tapers off, it comes down, and it goes to zero around the third year or so. It is zero, and then no impact whatsoever after that. So there is a small temporary 1-year impact, but definitely after 3 years, the impact of this social sector spending, this additional injection, is gone. There is no further. So what do we? So how does Indian performance data, my finding, compare with the findings vis-a-vis other countries? Once again, I am drawing on a paper written on the OECD countries, where it was found that a 1% injection in social sector spending actually causes 0.12% increase in GDP in the first year, but it goes up. In the third year, this impact actually goes up to 0.25% and then remains steady. So while the impact is showing the right thing, we expect long-term impacts. This is seen in OECD. It is not seen in India. In India, it just tapers down. And this is the finding. So why is this happening? Why does India behave contrary to what is happening in other countries and contrary to the predictions of economic theory? Findings of great economists like Romer and Lucas and Amartya Sen and so on. Why? What is the possible explanation? I give a possible explanation. It is not achieving its outcome clearly. And we all know about the status of the school education, 30% dropout in the secondary level. And what about hospitals? What about the healthcare system? We have 1.12 hospital beds per 1,000 population. The world average is 3. And 20% or so or less is covered by safe drinking water. So what sort of human capital are we really building here? So that is the miss, I think. My main argument to you is that we have missed the plot here. We are missing the fact that it is not even having any noticeable impact on human development and let alone growth. And why is this growth coming from this sector important? Because that is the growth that will be your inclusive growth. Because as we can have 7%, 10%, but if you want inclusive growth, you have to make sure that is contributed to by this very same section of population to whom we intend all these social sector investments. So, so what do I have in the end? Chairman has not given me much time. I think you're being unfair, sir. So my final point is non-inclusive growth coupled with a young population, which is full of aspirations, right, may well result in a demographic disaster rather than a demographic dividend. But overall, I mean, so has the budget taken some positive steps towards addressing this issue? After all, one budget is not going to solve all the problem. It has to be a continued effort year after year. Keep the focus, keep hacking away at it. It's not a problem that can be solved in 1 year. So has the finance minister taken the right steps in this year? I think he has. Thank you.
Thank you. Thank you very much, Singh. You have, please. I'm sorry I had to use my guillotine powers. So, the issue that comes to mind, coming to the budget issue really, there is one thesis doing the round that the government's higher social sector outlay, particularly, let's say, increase in NREGA, instead of an occasion to celebrate and the government to claim credit for what they have done, is actually an admission of huge social distress, particularly in rural India. Is that your assessment, or do you think that we are barking up the wrong tree? And second, do you think the budget has done anything to address the issue of leakages in delivery of these social sector outlays?
First question on Manrega. 48,000 crores was announced and everybody thought that, you know, fantastic and so on. But if you looked at last year's allocation, it was 47,500. 47,000? I mean, so current year is 48,000.
No,
What is it?
Fiscal 17. 16-17 is 47,500.
Yeah. So Manrega, I think, is working. So it is providing some sort of a livelihood guarantee. It is not, I think it should be better tailored so that we end up generating some assets. And the economic survey was a good document in the sense that they've used some nice technology to do this geotagging of asset creation, etc. I think more of that can be done. And we should convert the Manrega jobs into creating some kind of productive assets. Now, as for improving the delivery mechanisms, I did not see much in this budget. So I do feel that it's a good question you have asked. I feel that to improve these delivery systems, we need to create new institutions. Repeating the same thing over and over again is not going to give us new and outstanding results. We'll end up with the same results. So we have to do something new in terms of institution building and provide those connections to the poor people to the markets. And that is the way their livelihoods can improve. And so the government can only be a guiding factor in this. They cannot give the jobs.
Okay, thank you very much. May I now invite Dr. Shekhar Shah, Director-General of NCAER, to come and make his presentation on the budget. So far, the political scientist has budgeted his time very well, but the economists have not economizing on their time. So I do hope the economist will break this trend.
Thank you, Ashok. You've not only challenged the economists, but you've also changed the order of our discussion. Those of you who've been here in the past 10 years know we first start with macro and financial, the finances of the government, and we end up with Pratap, who gives us the real understanding of why things have happened the way they have. We've reversed the order, so we'll see whether Pratap still gets the most questions, which he inevitably does, or whether we can also command some of your attention. But thank you, Ashok, for this. And I really want to thank this wonderful audience who's sacrificed their Saturday to come here and join us. This is, as I just said, the 11th year we are doing it. And there is an invisible hand here, which is that of the World Bank, which supports us for this function, but is a very arm's length relationship, something that I think they should be very proud of. So I was charged with talking about agriculture and infrastructure, and if you can just set that up for me, that would be helpful. Yeah. Thank you. Whoops. That's not mine. Yeah, that one, the top one. No, not the top one. Yeah, thank you. I'll do it. Don't worry. There we go. So I was charged with looking at some of the real sectors, agriculture and infrastructure, and perhaps a bit of industry. But given that we've changed the order of things, actually Rajat has really looked at a lot of the issues that I thought I might. So I'm going to try and see if I can finish up and save some time and then actually have the fun part, which is discussing all of this with you. So the budget has so I'm going to talk about primarily, as I said, the agricultural sector, looking both at what the budget has done this year for farmers as well as in the non-farm rural sector. And this is continuing a trend that we saw very dramatically last year in last year's budget, when there was a clear move, whether politically driven as Pratap suggests, or whether it was just something that was the kind of thing that a government does 2 years into its regime. But clearly this has continued. And the big challenge that was thrown out by the Prime Minister is double farmers' income in 5 years' time. Now, NCR is working with the ministry to try to figure out how this is going to be done. And obviously, there are lots of questions about how and whose income and whether it's real, nominal. So there are all kinds of issues here. But this remains the big theme idea in agriculture. And for the non-farm population, the rural population, all the other things, Manrega has already been mentioned, but more of Manrega. The finance minister spends 5 paragraphs talking about Manrega, so that's quite a bit in the budget speech, but also basic infrastructure, roads, houses, electricity, water, drinking water and sanitation, and then ultimately skills for rural youth, and obviously the ultimate objective of all of this, job creation and opportunity. And they call it a non-negotiable agenda for our government. So, we take that at face value, and this suggests that this is going to be an important part of the long-term future strategy of this government. I'm sorry, I have to, this is a laptop that I'm not used to. It's rather antiquated. So, there are 6 schemes that are promoted. Again, none of them are really new. We saw the crop insurance scheme last year. It's had a very large uptake, much larger than anticipated by the budget estimates. The revised estimates show a significantly higher take-up of the crop insurance. And there are still moral hazard issues involved there. If we do have the kind of covariant risk, the kind of risks coming together in a particular part of the country, there could be problems. But so far, we have not faced them. But there's a long list of these 6 schemes totaling to a significant part of the effort on agriculture. There are none here that I can talk about as dramatically different. These are continuations of what were in place. There are some minor things like soil testing, mini labs, things like that, but I don't think they're going to make such a dramatic difference. The key issue that I think remains for us to be thinking about in agriculture is the twin problem of low productivity and the problem, so low productivity in production, and so factor inputs, methods of production, and then post-production marketing. Those are the 2 big challenges, productivity of agriculture and the marketing channels for agriculture. I have to say that while there are these incremental increases in many of these areas, overall, I don't see a game-changing shift in direction or a quantum jump in the kind of policies that are being promoted in these 2 areas. So I think we will continue with the kind of growth that we are seeing, but for people to be productively released from agriculture, you're going to have to see much more happening. In the non-farm rural sector, again, 6 schemes, including a overarching thing, and that's the plus there, which is being called the Antyodaya mission, which is essentially trying to take the 3 lakh crore plus investment from public and private sources, including from the banking sector, going into the rural sector and improve the accountability, the efficiency, and the convergence of this very large amount going into the rural sector. But here we, of course, have Manrega leading the pack. The housing emphasis, very emphatic this time. A large shift from 15,000 crore to 23,000 crore. The success continuing in rural roads with a claimed rate of completion of 133 kilometers per day, as opposed to something half that in the previous years. Focus strangely on masons in the skill development. Somehow that seems to be very important, and a large number of masons are to be trained, and the promise to achieve 100% village electrification by next year. So these are some of the proposals that are put forward in the non-farm rural sector. So what are these schemes achieving? And we tried to parse these in terms of the three things or two things that I mentioned. Their impact on higher productivity, their impact on higher incomes is trying to meet that double farmers' income promise, and of course, underlying this better rural infrastructure. The question marks here really relate to the fact that we don't know enough about them, and the government is not spending enough energy, resources, or outsourcing enough of this work, despite the conversion of the Planning Commission into Niti Aayog, into actually understanding what the evidence on the ground says. And this is really a lost opportunity with some of the new schemes, because we could have benchmarked these and we could have actually learned a lot about what needs to be scaled up and what should never be scaled up. So these are some of the problems that we see. You can make the case politically and rhetorically that each of these affects each of the three things I have in my three columns positively, but the evidence in many cases is not really very conclusive, because of leakages, because of bad targeting, because of the fact that there is gaming going on where I borrow at a low interest rate for my short-term credit and deposit right back into the same bank at a higher savings rate. So there are all these things that really need to be looked at, and this is the nuts and bolts of policy making, the nuts and bolts of policy implementation, feedback, and then revamping and renewing your policies, which is unfortunately not happening. This is a general comment, but I think in the case of the agricultural sector, and the rural sector, because of the large outlays, I think very, very important to be thinking about. I won't bore you with the details of many of these schemes, but all the right noises are being made, particularly on the major ones, the interest subsidy, the one that I was just showing you, the insurance scheme, the new irrigation effort, which clearly is very important. This is something that has been missing in the past. We haven't yet got to the point where we have an agriculture that is robust to monsoons. And this has been a challenge for the last 50 years. We still haven't got to it. But overall theme that Ashok started by saying, it's in the right direction, but it doesn't achieve a lot of the things that we could have achieved or we need to achieve, given the fact that we are at the stage of the political cycle of this government that we are, and given our demographic transition, which, by the way, if those of you who've read the economic survey, something that I would highly recommend. The economic survey does sound a danger note there that at least in the coastal states, the more advanced, higher income coastal states, we are going to see a peaking of the demographic transition between now and 2020 or 2022 or 23. So that the gains from the demographic transition, what people call the demographic dividend, the boost to growth that happens when you have a large percentage of your population in the working ages as opposed to in the ages where they depend on the working age population. That dividend is going to, at least for the more advanced coastal states, likely to peak in the next 5 years. The states in the hinterland clearly are going to peak later, perhaps by 2030. But this is a very serious challenge that our country faces. And I'm not sure that we have approached the matter of a number of these policies in our rural sector with the urgency that they require. On infrastructure, the biggest structural change, of course, has been the folding in of the railway budget into the union budget for the first time, I guess, in about almost 90 years. That's when the railway budget was separated out, on the grounds that that separation of the railway budget would allow the railways to retain their commercial nature. Of course, the exact opposite seems to have happened in these years. And the big hope is, we don't see it, I think, in this budget, but the big hope is that the integration of the railway budget into the main budget will allow for synergy, will allow for weeding out overlaps, will allow for a more strategic thinking between road and rail and other modes of transport and freight. So I think the expectation is there. It's a step in the right direction, but as yet in this particular budget, we don't really see the impact. And I was discussing this with Ratin, who is very hopeful, and I hope he'll talk a little bit about this. He's hopeful that in the next budget, we will see much more of the gains from this. There are a number of other areas where the budget provides the kind of support that we have seen in the past, particularly on roads and highways. A big emphasis now on urban mass transit, metros, with the success of the Delhi Metro and certainly the incipient success of many of the new metros that are going in for urban renewal and urban transport, and obviously with the climate change impact that it has. So this is another big push in the infrastructure area. Digital connectivity, I won't go into it because Rajat has spent a fair amount of time on it. A big problem in managing infrastructure, and particularly this goes back to rural infrastructure, is the capacity of the state. And here again, if you go back to the economic survey, it talks about 3 reasons why, and this may be an alternative explanation perhaps to what Pratap had to say, 3 reasons why, despite having moved away from central planning many, many years back, we seem not to have developed a liberal ideology that supports policy making as indeed it should, if we are going to be a liberal, progressive democracy with well-regulated industry, with the kind of freedoms and flexibility that we want markets to have with the appropriate regulation. And the economic survey talks about three areas. One is the absence of state capacity. Second is a ambiguous sense of the role of the private sector, where we are not able to either regulate it wisely, and we seem to lurch from one extreme to the other. And the third is inefficient redistribution. So state capacity in managing infrastructure remains weak. The PPP report by the Kelkar committee had many good suggestions to make, but these have not been followed so far. There is the hope now that there may be a dispute resolution mechanism set up under the Arbitration Act, and we are hoping very much that this will come about. There's also the need within the government to be able to deal with commercial transactions. A joint secretary who has to make decisions that can cost the exchequer hundreds of crores is in a very vulnerable position because of the overhang of the CAG, the CBI, and the CVC on the person's shoulders. And how does that joint secretary then make the correct commercial decision, which she or he must make in order for PPPs to succeed? Otherwise, you have a problem of the fact that when you enter into a PPP, the relationship is of one kind. It is perhaps a partnership, but after a point in time, it no longer remains a partnership. And the state asserts its eminent domain, and things start going awry. So there are recommendations in the Kelkar Committee report about an institution, whether in government or outside, that should develop the expertise to be able to manage public-private partnerships in infrastructure. And I hope that that will happen, but so far we seem not to have got to that point. Urban renewal remains a major area. India's rate of urbanization is going to rise dramatically in the years to come. The McKinsey report on this is very, very thoughtful and insightful. And the preparation for this In terms of the capacity, again, of urban local bodies is going to be a serious problem. The JNURM has kind of been reincarnated in this new form of the Atal Mission for Rejuvenation and Urban Transformation. But the key problem remains capacity. And unless we deal with it, I think we will face major issues of urban chaos and urban congestion and the effects it has on the cost of doing business. I think I'm going to stop here and say just a few words about the focus on the industry sector. Ratin is going to talk about the tax benefits that medium and small enterprises have been given with a halving of their tax rate. The corporate tax hasn't really been touched, as some in the audience here, I'm sure, would have hoped for and were promoting very vigorously. I think the wiggle room for the government has been so limited with the desire to remain on the fiscal path, especially with the FRBM committee report, which actually recommended staying at 3% on the fiscal deficit. They've gone to 3.2%, but not crept into the escape clause of the FRBM committee. So the wiggle room for the government on a whole host of these areas has been very limited. And that, I think, has been the biggest problem that the budget has faced, which is why it's adopted this safe and conservative approach to policy making for the direction that it has shown for the government. I'm going to stop here and stay within my time of 20 minutes. Thank you.
Thank you, Shekhar. I think you have done as well as Pratap, so I think as a bonus I will ask you 3 questions.
Suggest we leave it to the audience.
Just as a break, you know.
All right.
You made a point about no new agricultural schemes and focusing on housing, irrigation and insurance. Isn't that a very good thing in the budget, that don't take on too much, focus on what is right? That's question number 1. Number 2, what do you think will be the impact of the reintroduced system of outcomes budget in this time? You know, I mean, we did see some outcome budgeting happening some years ago, but they fell by the wayside. Do you see anything which is new in this outcome budget exercise? And number 3 is, what has been the mechanism, or is there anything in the budget, or is the budget failed to address the larger question of fertilizer subsidy reforms? So if you can address these 3 things, these are all agriculture related and nobody else is addressing agriculture otherwise.
Sure. So I'll actually club the first and the third question, because I think they're related. So what I would have really liked to have seen with the big push on DBT, the direct benefit transfers, the fact that the mechanisms are being put in place, states are being encouraged, there's a huge DBT mission in the Cabinet Secretariat. So I would have liked to have seen, in terms of the new schemes, really a move away from the producer subsidies that we are so a prisoner of. And I think we've lost that opportunity. I thought the whole big push on DBT, the Aadhaar bill, you know, things were going, I thought, in the direction of significant shift away from producer subsidies, but we seem to be stuck exactly in that same rut. So on that, I would have thought that we've really missed an opportunity. On the outcomes budget, so far I've never seen evidence of it having any salience, really, besides a reporting mechanism. And parliamentary committees need to take it far more seriously, and I just don't think that they either have the skills or the backup from various government apparatus to be able to do that. We really do need to re-energize that role of the watchdog. Frankly, what are the penalties for anybody if, you know, the outcome budget is not met? So I almost think it's an exercise in futility. Again, it's state capacity. If you don't have the state capacity, how do you transform achievement or a non-achievement into either an incentive or a penalty in a fair way, predictable way?
Thank you. Let me now invite Dr. Rathin Roy,
Thank you. Good morning. I'll launch straight in because I'm actually going to talk about the principal purpose of the budget, which is fiscal policy. Everyone's talked about other things that are the consequences of fiscal policy, but I think the budget is principally an articulation of the government's fiscal stance. It's therefore a very political document. And I actually like this order because I can now try and interpret what has happened in terms of fiscal stance, contexted in the political comments that Pratap made and the expectations that were outlined by the other speakers. So you actually quoted this in your initial survey, AKB. So it was my headline, prudent in practice, extravagant in rhetoric. And I think that's an excellent idea, to be prudent in practice and extravagant in rhetoric. I have no problem with governments that use rhetoric to secure political constituencies. They can fool you, be my guest, as long as they don't throw money after such actions. So I like this budget. Now, going straight to what Pratap said, I did not expect fiscal prudence this year because there were too many cries of mummy, mummy, help me, coming from the organized private corporate sector, coming from private sector economists who should really know better. And I'll come to some of the things that at least my professional community said, which I found outrageous in 5 minutes. So I thought, game over. I remember last year the heat and dust, and somehow we managed to secure our fiscal consolidation path. So I really was pleasantly surprised. I saw the FM as I walked out of Doordarshan, and he said, when he was coming for your interview, and he said, what's your takeaway? I said, thank God you only slipped by 0.2, given all the pressure on you to do I don't know what in the pre-budget meetings, etc. So I was very pleasantly surprised. More important for me, I was very pleasantly surprised that we continued to address the structural problem which underlies central government budget making, which is the ratio of essentially borrowing for consumption, or borrowing for current expenditure, if you like, and borrowing for investment. Now, I'm not a great fan of privileging borrowing for investment over consumption, but there have to be limits, and we've crossed them a long time ago. This is the long-term historical bipartisan record of government. Other than in the very good Kingfisher times, our FD-RD ratio has been worrisomely, RD-FD ratio has been worrisomely high. Since the advent of this government, actually 1 year before the advent of this government, that ratio began to drop. And when the FD went up, there is a great temptation to let the RD go up as well. That did not happen. So while the FD GDP ratio has gone up, the RD GDP ratio has gone down and continues to go down. And I think that is a good thing. So on these two headline macro fiscal points, I could be happier if it was 3%, but that's okay. That's for FRBM committee reasons, which will come later, but I'll live with 3.2, cool. Now the other thing I want to tell you is that I see all of you have a lot of expectations, but I actually see a bipartisan trend since Pranab Mukherjee demitted office in shrinking the size of the central government. And I'll show you in a minute what I mean. You're all arguing for more expenditure here and more expenditure there. You can do that in two ways. You can increase the size of government, or you can spend less on something and spend more on something. Well, a government which is, and this is the trick, all my numbers bar one slide are as percentage of GDP. So not 20% increase in this and 30 in that. GDP is the total size of what you have. Government takes a share of it, right? That share today is between 24 and 25%. General government, center plus states, tax 17 and borrow between 6 and 7. That's a quarter of GDP. So what I'm interested in seeing is, are we exceeding that quarter? Are we lowering it? And you can exceed it also by taxing. And what I find to my very pleasant surprise is that the tax GDP ratio is going down. The revenue GDP ratio, even better. And if the fiscal deficit GDP ratio is going down, which it has, from 3.5 to 3.2, then as proportion of GDP, this government has been consistently taxing less and borrowing less. So make no mistake, the medium-term trend in this country is to shrink the size of central government. And this seems to have bipartisan support. Now, my own personal view, we can debate this, is that this is a very good thing. I think for a long time, even looking at the fiscal record of the states, the central government should really start ceding fiscal space to subnational governments over and above what has been done by the Finance Commission, and focus on its core business, which I believe is Cabinet Mission Plan. Of those of you remember the Cabinet Mission Plan 1946. I mean, get your defense expenditure right. Get your basic infrastructure right. Don't start trying to do, you can have rhetoric, I don't mind, and some small amounts of money there. But if we get our basics right at the central government level and then motivate and encourage state governments to do better, I'm talking fiscally, remember. I'm not talking about the regulation of national education. I'm not talking about national health standards. Don't cost money. I said this at the beginning, it's a fiscal thing. So the business of where the government is spending money, I think this is a good thing that's happening. The FRBM roadmap, I was a member of that committee and the FM did allude to it, seeks a debt anchor of 60%. And what the FRBM does, I can tell you, is try to maintain the fiscal space currently available to state governments in that context while securing medium-term reductions in the debt of the central government through a modest decline in FD over the next 5, 6, 7 years. And simultaneously, if the FRBM recommendations are accepted, any increases in revenue the central government gets as a proportion of GDP will be deployed to reduce the RD GDP ratio so that it is at a more manageable level. It's 68%, 60% now. We really need to halve it over the next 5 or 6 years. I'd like the RD to be zero. I don't think it's going to happen for reasons I can go into in the discussion, very somber reasons. But if the central government RD ratio can come back to about 1/3 of total borrowing, I think that would be a good thing. And I think that's the medium-term strategy. And a corollary of that being accepted as the medium-term strategy is increases in tax collection as a percentage of GDP and reductions in fiscal deficits will imply a smaller size of the central government in total GDP. And I fully support that. And as I said, I'm quite comfortable with the political rhetoric of the budget. Use it to talk up the economy, talk about agriculture, introduce schemes, bring in acronyms. They all do that. But don't spend more money behind these. And I'm so happy that this government is not doing that. Now, I think this government is not doing that in the face of a challenge, and I want to call it out. 3 phrases are used in this country repeatedly by economists who really ought to know better. I'm being provocative because we are many in the room. The first is counter-cyclical. Now, I'd submit to you, I'd love to see counter-cyclical policy as opposed to a policy that deals with exogenous shocks. If you could show me a cycle, and I do not mean a polynomial in 3 degrees, I mean a real business cycle. Chetan is here. He has made an attempt which is very instructive to me. I think it is possible for us eventually to come up with some sort of structural business cycle for government. But the fact of the matter is the government does not have it. And when the government does not have it, it is imprudent to speak airily of cycles and counter-cyclical in the absence of business cycles. So that I'm glad the government managed to resist. The other is expansionary. Expanding what exactly? The only way I can see people talking about, some people say, oh, expand, and this is what Pratap spoke to, because private sector is not spending on investment, so let government play mummy and increase investment. That argument I reject. For the reasons Pratap has alluded to, I don't need to go into them. I think we have enough sort of government playing sort of mother to the private sector, and when they're in a good mood and they have money to waste, they do so and make bad investments, and then they get overloaded with debt, and then mummy has to step in and raise private investment or bail them out. The third is Keynesian. This is fascinating. So you want Keynesian expansionary policy because, economy is under cycle and all that. Well, where on earth does one get in economic theory the proposition that if you want Keynesian expansionary policy, you do public investment? If there's an aggregate demand deficiency and you want to correct it now, you raise consumption, which means you raise the revenue deficit. And pray, how will the central government do that? You could do that through putting money in Jan Dhan accounts, which the government has not done. Or you could do that by increasing government servant salaries. Would you like that? I don't think you would. So as far as these 3 challenges that came from my professional community, kudos to the finance minister for resisting them, really. But I did have to call them out today. Okay. What's happening on the revenue front? Not much. We aspire to lower in corporate taxes the proportion of GDP, and that is a good thing. Gross tax revenue rises very marginally. This is broadly progressive, as you can see, if you like. Nothing much is happening, really. Indirect taxes are going down, and there's great faith in taxes on income, personal taxes on income going up. That's not too large. Anyway, that's an article of faith of the finance minister. The belief is that demonetization has brought more taxpayers into the net. We will see, but in any case, in the wash, we are talking about a 0.05% of GDP increase in the tax GDP ratio. Okay, so I'm cool. I mean, if they don't achieve the 0.28% increase in personal tax revenue, the heavens are not going to fall. If they do achieve it, nothing dramatic is going to happen to the fisc of India. Okay. What I don't like about this budget on the taxation front is that it's a chartered accountant's budget. What I loved about the budget last year, is that for the first time in my living memory, Part B of the budget had more proposals about tax reforms and institutional reforms than about what I call third world budgeting. Pan masala exemption, what did Chidambaram once do? Pet food exemption. I used to find it very embarrassing. And JT did it last year too. And this year has done it in abundance. That, a multi-trillion-dollar economy finance minister sits there and in their budget speech they talk about pet food exemptions. I mean, this is not like how you run a multi-trillion-dollar economy. So last year I was impressed. The word reforms was right there in the chapterization, and then you had a series of measures to bring in reforms, and then you could forgive the occasional, I don't remember what he did last year, exemption. This year we are back to the same old business. It's full of exemptions. Exemptions for small industry, cutting these rates, raising those rates, the kinds of things which if I challenge you next year to even remember, if you're not a chartered accountant, you won't. And this is dangerous. The other issue that has been raised is taxpayer terrorism. I wouldn't go that far because we've always had taxpayer terrorism. The question at the margin is it more or less? I think I'm worried about a couple of clauses. I'm worried about the powers of that the tax authorities have been given to conduct raids and not be answerable to them to any court of law. And I hope that that is amended in Parliament as we go ahead. And a couple of other things, but there are a couple of things that are also good. But broadly speaking, I think this is slightly more terrorist than last year's budget, which was significantly less terrorist than the year before. Finally, I note that stealing from states continues, by which I mean the honored UPA, NDA bipartisan practice of adding cesses onto the budget. This year, what they have done is absolutely brilliant. This year, the cesses, this year, they've not even spoken of cess. They have cut taxes for people earning between 2.5 and 5 lakhs a year, and they have imposed a surcharge on everybody in this room, more or less, except the students. But that surcharge is not shareable with the states, because it's a surcharge, right? So again, they have dipped their hand into the kitty, taken money into their own pocket, and left the states with less. Very great pity. Nothing much to be done about it in our polity until we change the constitution, but I hope to write and agitate that this constitutional change is long overdue. Any government will do it if they get the chance, if you know your bureaucrats. Okay. Expenditure, what's happened? Nothing much except in 2 sectors, and that's good. I keep telling you, I don't think the central government should be wasting its money here and there. This I like. Petroleum subsidies are down. That assumes things happening to oil prices. What it signals is that middle-class pressure to pass on the benefits of low oil prices will continue to be resisted, and that's an excellent idea. God bless this government. Put on 10 rupees more on petrol, I have no objection whatsoever. They decline, and subsidies in general, fertilizer subsidies have been kept constant, which means effectively a decline in terms of percentage of GDP, so that's great. A lot of talk about agriculture, but nominal GDP growth is 12%, and you're increasing allocations to agriculture by half of that. If you're happy with that, it's okay. Education the same, defense even less. The 2 sectors where things keep, well, in rural development, things keep pace. And in transport, there is a hefty increase, but this is partly statistical artifice because you have included the railway budget now in the main budget. There is an increase. It is too complicated to put on a slide. Let's be fair, there is definitely an increase. In roads, there's an increase. In the railways, there is maintenance, but bringing them together gives you this rather high number. So on the expenditure front, again, I see reasonable prudence. 2 more points before I finish. I have 6 minutes, excellent. I want to go back to this point that, again and again to argue for the central government to increase capital spending is fallacious and has been fallacious for a long time. I say this every year in the hope that someone will listen and Yes Bank and other people who keep saying capital expenditure by central government must go up will stop doing so. There is nowhere to invest for the central government. Look at the central government's business. The central government's business is investing in what? CapEx, defense, railways, which they are, roads, and with great effort to act as a merchant banker, put in 20,000 rupees to NIIF and then say, let's get 5x from somewhere else. That merchant banking they do. But there simply aren't the avenues for the central government to increase CapEx in the way you want. And remember, the quality of central government expenditure is also limited. How do you like equity investments in Air India? I don't. How do you like the quality of expenditure in terms of bank recapitalization? You might have to do it, but I wouldn't argue that's great quality expenditure. It's not going to bring you all these lovely benefits in terms of, improvements in infrastructure, etc. So if you want to see improvements in infrastructure, I think the present trend will continue, which is that the heavy lifting will be done by the states, which collectively do double the capex of the center. And it's very important to say this in the imperial capital. So please do not delude yourselves that you're sitting here and running the ship of state by undertaking capital expenditure in the center. It does not happen. It happens in the states. What happens there is a different issue. Okay, last point. I am so pleased that the finance minister in his wisdom has avoided entering into what I consider to be a very unholy elite consensus regarding the incidence of growth in India across the spectrum, left and right. See, there's something in economics called the second theorem of welfare economics. So the second theorem of welfare economics says that you can attain any desired level of maximization of your output, so any growth rate if you like. And then if you're worried about the income distribution, don't tinker with that. Attain that growth rate and then use lump sum transfers, right, to improve the income distribution. Now, this is completely antithetical to any notion of inclusive growth that I can believe in. Growth must come by people producing and consuming things and doing it collectively more, not by some people producing things and raising wealth and then giving money to other people. That is not inclusive growth, that's growth sure. Now, both NREGA and the great universal basic income are manifestations of our failure to secure inclusive growth. Because what does basic income say? It says, oh dear me, the economy is growing by 12% and we are going to double per capita income every 5 years. But 60% of you are not going to be doubling your income every 5 years. So I'm going to give you a universal basic income so you can improve it by 20%. Well, I'm all right. Now, that's fine. If you like that policy, that's fine. And that policy may have some merit if you admit that you're incapable of generating inclusive growth, which a Marxist would say, but I'm not a Marxist. So I still have faith that we can generate inclusive growth. This budget, by not talking about universal basic income, and by talking up NREGA but not putting much money in it, and by reaffirming the commitment that somehow we are going to change the pattern of growth. I'm not quite clear how, but somehow we're going to change the pattern of growth in a manner that it becomes inclusive, which would mean what? Which would mean ultimately that you would have more taxes, you would have an easier income distribution, you would worry less about handouts, and you'd have more money then to give the states to put into health and education to build first-class health and education systems fit for purpose. That is one economic trajectory. The other economic trajectory is this room grows and the rest of India doesn't grow, and then this room handouts money through the budget to the rest of India. That's what UBI is about. That's what NREGA is. That's not a bad thing if you admit failure. But I don't think the government's admitted failure here, and I'm very pleased about that. So to conclude, I think this is a prudent budget. This is not a budget that accepts the second theorem of welfare economics as the basic function of the state, which I like. If you're looking for action in this budget, there's not much action because it is prudent. There's not much action on the tax GDP ratio. There's not much action on public expenditure. And the most important thing I think we see here is the ability of the government of the day to resist attempts by those in the private sector to ask, as Pratap was saying, repeatedly for bailouts. They have resisted that, I think, not entirely, but in substantial measure, and that, I think, is a very good thing. So I would commend this budget to you. Thank you.
Thank you. Thank you. I think you have woken us up all. So I think it's a wonderful presentation. Without, can I spare you from asking a question? I think let's go to this thing. One question which comes to my mind is you talked about the states. I was doing a quick calculation, and the combined size of the state's budget is right now close to 24 lakh crore, and the central budget is 21 lakh crore. So my question to you is that how long will it be before the community of economists and analysts take the state combined budgets and their implications and everything more seriously than just the union budget?
Well, I'm very happy that the IMF has finally started doing so 3 years ago. That's always a good step when the IMF starts something, right, Andreas? And the World Bank regrettably still doesn't, but we have a new country director who might actually start getting out general government numbers. The government certainly does, because evidence for this is that the FRBM committee terms of reference asked us to look at fiscal responsibility of general government, which is center plus sigma plus combined states. So I think more and more we are going to be in an environment where we'll have less and less of this happening and more of general government happening. My suggestion to Arvind Subramaniam was that if he actually brought out a general government economic survey, that would be a very good thing. Now that he's said so many lovely things and important things, I'm hoping next year's economic survey could possibly be about general government.
Okay, thank you. Now I think it's time to throw it open to the floor. Please raise your hands, identify yourself, and then maybe ask a brief question. Yeah. Okay, fine. Yeah.
Thank you, Mr. Chairman. Yes, it's working. One comment first, and one question, criticism, suggestion, and finally one clarification to all my distinguished panelists who are there for wonderful presentations, very enlightening presentations. First, the comment. I think there's need to understand, to be realistic, that market economy constraints on private sector investment dominate any thinking by zealous politicians, political scientists, political parties, or economists. This is not well understood. Mr. Chidambaram's time also, 3 years, he tried stimulus, tried to improve. You know, I'm talking of the post 2012, 13, 13, 14, 14, 15, 14, before the NDA, especially 2. Nothing works, you see, if they have overzealously, like in the United States, exuberant private sector, which saw growth of 9%, 8%, and overinvested so much that when the demand crunch comes, both global demand falling and domestic demand falling, there is no other way they are going to do it but strike and wait for better time for the capacity constraints to be over, and that's what all the captains of the industry are saying. Therefore, don't misread center states, public center and state and center capitalist kind of conflicts.
Yeah,
I think until the capacity constraints, which are still there, farmers' incomes going up through better crop, pay commission were supposed to generate it, demonetization has hurt the, slowed down consumption. So we can see still some more time before.
Your question, please. Yeah.
Yes,
yeah.
that's the understanding. Second, the question, for the suggestion, the criticism. If the need was there for employment generation, like Ratin says, to create demand for those who are displaced, which was a very prominent fallout of demonetization, there is not enough done except indirectly through 95% of MSMEs, getting corporate tax rate cut from 30% to 20%. This I call indirect stimulus to employment generation. The direct stimulus would have been much better to realize that MSMEs are the now focal point, are the forces for driving forces for engines of growth, and therefore, despite our not liking subsidies extensions, some tax breaks are linked directly to incremental employment generation over their statistical average of 3 years would, to my mind, have served prudence much better for a pragmatic budget. Third, clarification. I would have expected distinguished political scientists like my colleague Pratap to tell us a little more about cleaning up the political funding, which is the source of, the first source of corruption. We know that, black money, etc. The most important one. There are many others which all of us know that.
Okay.
But there, the electoral bonds, I would like Pratap to kindly clarify what is it in it? Is it falling short, very much short? And if it is so, how can it be improved? This very instrument can be restructured to achieve the objectives which the Honorable Finance Minister has. Thank you very much.
We'll take a few more questions, Shubhashish.
Charan Wadhwa is my name. I'm sorry, I didn't say.
Yeah, okay, sure.
Shubhashish Gangopadhyay from IDF. Since Ratin has already allowed economists to make fun of themselves, so I'll do some. So first thing, the question that you asked about the NREGS, right? I do think that economists have been extremely dishonest, because when the NREGS or the Monrega now, when it first came up, it was considered to be a stopgap, and really one felt, since it is now almost 10 years, one felt that with development happening, growth happening, that the disbursements in NREGS should go down. I'm surprised to see that both economists as well as politicians take great pride in claiming and this is not just rhetoric, claiming that the NREGS disbursements are up. So I think it does, show something about the stress that the lack of job creation does have. Now, when one comes to agriculture, and since Shekhar, I gather, is working with the ministry on this, you announced, right? This doubling of farmers' income is another thing that economists should think seriously about. Any studies, regardless of the time it was done and who has done it, tells you that if our productivities are going to increase in agriculture, the farmers will be out on the streets without any income because the price elasticities are really low, right? And the income elasticities are also not that high. So even if we allow for growth and all of that, this approach of doubling farmers' income by increasing productivity is absolutely wrong. It would be much better if other things are done so that farmers can leave agriculture to double their incomes. I don't know why, to develop farmers' income, we're always thinking of agriculture. So the government has to look at non-agriculture to be able to develop erstwhile, 5 years later, erstwhile farmers' income. Now, as far as the outcome budget is concerned, and Shekhar, I thought would respond more strongly on that, as he correctly said, that without data being available to the general public, forget about accountability if the outcomes are not met, right? There at least should be a public discussion on the outcome of each policy. And that is not possible in India because the data is usually 5 years old. So there has to be some thing done by the government to be able to have better data. Finally, one last point, Rathin, I could not but comment on this. The second theorem of welfare economics, the way you put it, is not correct. Because the second theorem of welfare economics states that if you give me any efficient outcome, I will give you a perfectly competitive economy which will get you there, provided you allow me to do some initial distribution of resources. And that the government must do. And in our case, by initial redistribution, I don't mean taking away land from somebody and giving it to somebody else, because that is politically not feasible. But education, capital that can be grown, assets that can be grown, certainly the government should be supporting that. So in that sense, I think if we want to think systematically, then those are the things we should do.
Thank you. We'll take one more question and then maybe you'll ask the panel to address them. Please go ahead.
So, extremely wonderful presentation. Thank you so much, all of you. My question is to
Can you identify yourself first?
My name is Praveen. I'm from, I'm a chartered accountant. So.
Okay.
So, it's my budget. So, my question is that we talk about doubling the income of farmers. We are talking about Manrega. Finance Minister talks about that effectively more than 5 lakh rupee of income people who are showing are only 20 lakh if you remove the salary class. Now, why there is no question raised or asked about bringing agriculturalists into the tax form, into the tax net? Why? I fail to get that answer. Thanks.
Can I come to you? Because there's a political funding question which...
So, very quickly on political funding, I think it's a new benchmark that at least it's now part of budgetary discussion proposals, and so presumably the political pressure to at least be seen to be doing something will be there. As proposed at the moment, the two proposals are very underdeveloped. The electoral bonds one, I mean, it seems to stress largely the anonymity, which of course runs against the principle that in a democracy, actually you need to know who's funding which political party. Presumably it's to stave off pressure or the fear of penalty to be publicly seen to be donating to one party or the other. So it's not clear actually what the architecture of this proposal is, and the 2,000 rupee versus 220,000 is depends on the ingenuity of accountants. I mean, I don't buy the idea that you can actually limit the number of people who can donate. I mean, I'm not sure what the constitutional basis of doing that is. So the political funding story is still a pie in the sky story. And may I just say something to be controversial, which is, I think frankly, if you want growth and redistribution, I mean, I think tackling corruption is important. But I think a moralized view of corruption will only strengthen the state's authoritarian tendencies. I think let's be realistic about it. You have to be very prudent about which corruption battles you find. You know, you pick out a couple of sectors which are important. And fact of the matter is, more than even political funding, I mean, just look at yesterday's news, right? Godhra riot victims off, Aircel Maxis acquitted. You simply do not have a public prosecution system. No investment in that, right? You have no investment in sovereign functions. Mr. Amit Shah is going around UP saying, you know, we will have anti-Romeo squads. I mean, this is like what, vigilante substitute for law and order, right? Name one state government that is actually committed to getting policing and public prosecution right. Then you have a serious anti-corruption story. Everything else is just sort of symptoms. It's you know, and frankly, there's no commitment. I mean, no political party is going to. I mean, the judiciary is going to be. I mean, is going to face some very severe times. Let's be very clear about it. All the signs are there, including, frankly, the Supreme Court is also scoring a lot of own goals, right? So the bedrock of sovereign function, which is a good public prosecution system and a good police force, you don't have. Everything else is hogwash.
Okay, thank you. Anybody else who would like to respond to the other points made? Raja?
Well, I think I just want to underscore the point that Sohashish made and Professor Charan Wadhwa also referred to, is the need to create better and more non-farm jobs. And that's perhaps the best way of improving farmers' income and raising agricultural productivity. And obviously, as I said, the budget can't be expected to address that problem, but that's a huge challenge. I mean, creating productive jobs. While several steps have been taken, you know, the economic survey last year spent a lot of time, not only last year, but the year before last, spent a lot of time talking about whether it's going to be manufacturing or employment. Then it talked about the Chakravyuh problem. You have, you know, entry has been reduced by delicensing, but the exit problem remains. And that obviously creates an entry problem in itself. So government has put in place an insolvency and bankruptcy law. It's trying to reform the labor laws. The finance minister mentioned 44 laws are now going to be codified into 4. There's increasing formalization of the Indian economy happening, and digitization will only enhance that. But while all these dynamics are happening, there's another overhang of tech. India is anywhere more capital intensive in labor intensive industries compared to other Southeast Asian countries, including in China. And then there's this technology, the overhang of technology, the risk of technology that are happening. So I don't know. I don't have, you know, ready answers to this question. I mean, besides saying that labor-intensive industry, SMEs, which are the highest employers, could be given some incentives or breaks. But if this long-term problem of job creation is to be addressed, you know, several things need to fall into place, and this panel has discussed on the institutions and robustness, and but this new Trumpism that is coming up, and the economic survey talks about we can't grow at 8-9% unless, notwithstanding what Ratin said correctly, that it shouldn't be seen as a a substitute for redistribution. So you start at the bottom and create more jobs, but you know, you can't grow at 8 to 9% unless your exports grow at 20%. I don't see exports growing at 18 to 20%. So it's a challenge. I mean, what's going to happen? Will we, you know, have a social revolution that Pratap spoke about? Is inequality going to even create more of problems because jobs are only being, you know, harnessed by the people who are able to get them because of adequate skills and capital replacing labor? But you know, coming back, you know, jobs is the central major challenge that is facing.
Dr. Shanti, you would like to? Shekhar, yeah.
No, Shanti? No? Okay. So I was actually just going to add to perhaps Pratap's view of essentially the absence of rule of law or the erosion of rule of law. There's one particular flashpoint that I'm very concerned about. It wasn't something that I was going to speak about, but now this is an open discussion. I think we should reflect on some of these things. And this is the twin balance sheet problem that you referred to. I think we have a very serious, incipient, perhaps not so incipient crisis looming. And I don't see anything in this budget that is taking that crisis or that problem into serious consideration. The recapitalization allocation is minimal. There are people who are working on this, some of whom have been in conversations with North Bloc and made the case for a very serious look at this. But certainly, I think those here from the think tank world and the research world and those who are into the outreach business or the media business should be thinking a lot about this, because I think it's a flashpoint that is waiting to go off, and once it does go off, as we know from previous history, it's very hard to recalibrate and to come back to an equilibrium. I don't know if Ratin has anything to say to this, or others who deal with the financial
On welfare
sector.
economics, no?
No, not welfare economics. On this problem of the twin balance sheets.
Yeah, I do. In a sentence, I'll recommend a 500% increase in recapitalization if we have a plan to bring back collateral from the private sector. I mean, it cannot be the case that we recapitalize the banks and the private sector does not hurt. These guys have to hurt. And I do not see them hurting. And if we do this, we will have the same problem every 15 years. So
we need a bad bank, right?
we need more than a bad bank. We need them to hurt. I don't care how. Bad bank, good bank, at least put them in jail. But, we do need them to hurt. So as long as that happens, politically it's impossible to argue for significant recapitalization. I can just see them, as Pratap was saying, laughing their way yet again to the bank. Two quick comments. One on what you said. Thank you, I stand corrected. There is, in addition, the Calder-Hicks compensation principle, which we don't require initial endowment redistribution for. And this has been worrying me when I worked in the UN too. There's a complete conflation of the idea that, if someone for some reason, either temporarily or because of some feature disability, needs to get income from the public purse, and the idea that the vast majority of people, in an economy that is allegedly growing to the extent that our per capita incomes, well, at least our aggregate income, doubles in nominal terms every 6 to 7 years, will need income support. We really need to look at this very carefully. I'm not referring to the kind of targeted proposal that Surjit gave, which should be self-cancelling, but the idea to have a universal basic income or a demand-driven Narega. So I want to, again, ram this point home. I'm actually pleased that so far the government has resisted these floodwaters, because they're coming from both the left and the right for very different reasons. And I'm terrified at this unholy consensus. Okay. On outcome budgeting, very briefly, within public finance, the traditional division of labor is you worry about the outputs your money buys, and the electorate worries about the outcomes. Outcome budgeting is great for me as a consultant. I'll make a lot of money out of it, I have. But ultimately what it does is it provides bureaucratic affirmation to the idea that things are not going well. In my experience internationally, politicians know when spending is not resulting in outcomes. Evidence, yesterday the Ministry of Rural Development called up an IPFP and said, we need your help because the Prime Minister is saying, I'm not interested in leakages in Narega. I want to know if it's making a difference to people's lives. So they know well before what is happening to outcomes. So I think this is hogwash, and I think we shouldn't do it. Focus on output-based budgeting. Are you getting outputs in terms of the quality you want and where you want them with your money? That's very doable. It's unglamorous work, but it's very important we do that first.
So paper wasted, you mean? I mean, the document paper wasted and consultants. We have a sharp question coming from Surjit, after which we'll go to the lady there. And then third, okay, this gentleman. Yeah.
Yeah. One, I think we are not being, Mr. Wadhwa asked the question on election funding, whether being very fair to the attempt being made of solving this major problem. Now we refer to that in a perfect system, you should have no anonymity. And, if we are always after the perfect system, we'll never get anywhere. So one, and what I heard yesterday is that apparently Jaitley said that he got the idea for the election funding proposal from some committee report that Manmohan Singh had chaired. I'm trying to get that report, but one comment on that. Second on, and I think some people have already alluded to this whole Narega thing. It's if you should have it as a ratio of the total budget, is continuously going down. So this idea that suddenly these guys are spending more on Narega is just hogwash, and they're spending less and less and less. So inflation has eaten away a lot of what Narega was meant to be. So before we cheer ourselves that, listen, these guys are doing it, and I agree they're doing a very good thing in terms of eliminating it. Now, the question, one was on election funding, Narega was a comment. My question on if any one of you, all of you were the finance ministers, all of you have talked about taxation. I want to ask that, do you see the distinction? And then I think Pratap mentioned about doles, that the corporate sector is always coming in for doles. The corporate sector in India pays 61% of its profits in tax. The private sector in India, personal income tax, pays, if you will, only 25% of us are compliant. Okay? Only 25% of the entire tax, those who owe taxes, pay taxes. One, to equate the two and talk of it as one problem of the tax ratio is, I think, quite erroneous. So second, how do you say that, and this is to Pratap and I think somebody else who had mentioned, maybe Rajat had mentioned, you want to increase corporate tax revenue, and you're going to do it by increasing taxes, and you want to be competitive with Bangladesh, etc. How are you going to, and you want to create employment, and you want to increase taxes even higher than 61%? Let's get the, if you will, circle right.
Okay, the lady there.
Hi, my name is Sonali. I'm from Visa, the Global Payments Network, but my questions will not be related to payments. They're more around economics and the political economy. So Rathin, it's for you and Pratap in general. I couldn't agree more about the discomfort with the private sector always getting away scot-free, but I think the private sector is always brandished as being the bad boys who made money. What's often forgotten is the private sector pays the price for the incapacity of the state. The number of stalled projects in this country is what has led to the fundamental crisis between the private sector and the state capital and the states. In that case, I think always accusing the private sector of running away with money is actually, a double-edged sword on the private sector, because do you want to discourage the private sector from participating in the state, which is what we're seeing today, even if they wanted to? Or are you going to equip the state to then be able to fundamentally develop infrastructure? And does it even have the capacity, both the financial resources and the human capacity, to be able to develop that infrastructure? So that's one comment on the overall private sector without making a squaring pitch for the private sector. I have two other questions that I would really like to ask in the absence of bank recapitalization and the complete stall in the flow of capital. We've seen personal loan growth significantly higher than credit growth. Credit growth is anemic at about 5.5%. And then we talk about growing the MSMEs. Is that not the creation of another NPA bubble, maybe of a smaller level, but significantly higher actually, because the corporate sector still has assets, the MSME that you can collateralize. But what happens to the MSMEs? They just collapse, the money is vapor. So that's number one. And is that really a sustainable path? And the second is, Pratap, to your point around housing being the story for 2019. If that's really true, I think that's going to be a significant blowback, and I would love to hear what you think. Because one, housing, if we look at the quandary between the real sector and the banking sector, if the big real estate companies begin to melt, and with things like the Benami Act, you're actually going to see a further crisis of the banking sector. In that situation, who's going to actually be able to finance affordable housing, number one? Is it going to be state expenditure? If yes, where does the state have the money given all the tall order promises? And two, do our cities even have the carrying capacity? I mean, they're collapsing today to a point where it takes an hour for a distance that should be covered in 15 minutes. And I'm just being practical. So this whole story around housing and giving it infrastructure status really needs to be decoded. And I would love to hear from this group what you think, because the point that Shekhar Shah makes is absolutely relevant. There is no capacity. I mean, municipal accounting, a veterinary doctor a vet is writing municipal accounts in cities. So what are we really talking about when we say housing?
Okay.
Thank you.
Third question, and then we'll go to the panel. Yeah.
Thank you for wonderful presentations. I have very brief two observations and one question for Ratin. It's a more of a query rather than a question. Firstly, I think when farmers' income is being talked about doubling, this time it is not the farmer, it is the farmer household which earns income from crops, from livestock, wages and salaries, and non-farm income. So what is doubling is the farm household, not the farmer alone. Second, I am a bit confused with yields raised and farmers not getting money. Probably it's a simple Ricardian comparative advantage. We are talking about a closed economy. So once you have the comparative advantage of lower prices with higher yields and not restricting the exports, farmers are going to gain, because every time the prices crash, we have some problems, and every time the prices rise, so the export controls must go, and that's important. Ratin, I am interested in knowing one thing. Could the budget talk about, because we have been talking about GST for a long time, as if GST would resolve everything. One of the important questions is of infrastructure, which a study by Rakesh Mohan, National Transport Development Policy Committee, there was an issue where we talked about that GST is not going to resolve the efficiency of transport sector, because every state has a completely messed up tax system apart from GST. That is, truck tax is different in Haryana than in Madhya Pradesh, so I go to Haryana, give a fake address, for example, and buy a car from there. So taxation structure is completely messed up, and hence the infrastructure in transport is in mess. So probably GST is not going to resolve these issues, and we had suggested that there should be a model act, like Agricultural Model Act, which since it is a state subject, we should present to all the states. Look, there are benefits from the uniform taxation across the states. So any thoughts on that? I know this is not a budget question. Thank you.
Okay. Yeah, exactly. Ratin, why don't you start?
Okay, so let me start with what Surjit said about, I don't know where the 61% number came from, but pardon? Oh dear. All right. But let me say
for every country from 2004 to 2050.
But the number must have differed every year. It can't be 61 every year. Anyway, so
61 right now.
okay. So, but we do know that corporate tax reform that we can do in this country would actually raise tax revenues to the private sector. That is, we do know, because I've been involved in that study, that if I can make everyone pay 25% corporate tax without any exemptions, then my tax revenues from corporate taxation actually go up. And that would probably mean that some companies that are paying 20 in this country would start paying 50, and some companies that are paying 81 would pay 50. So that normalization, I think, is a good idea to do, right?
One clarification.
Yeah.
61% of your profits go into some form of taxation, which includes dividend tax, which includes social security payments,
right,
and everything else. And it's on the same basis. It's done for every other country by the World Bank, and in Bangladesh, in Pakistan, etc. It's somewhere around 35. The parallel number for most of our competitors is almost half of what it is.
Okay,
it's all things coming out of your profits that you pay for.
Okay. Then
dividend tax included.
Yeah. Then we're not doing
cess included.
Oh, including tax, including cess.
Everything.
So yeah. I know. So, but let's not take that number. Let's agree that we could bring, one thing that I think you would agree is we should bring the corporate tax rate down. And we should bring it down to 25, and we should remove exemptions. And then I'll be happy and you'll be happy. We'll have a lower tax rate, and we'll have, in my view, a higher tax collection. So that'll be good, right? No surcharges. I agree with you.
Now, if you want to talk about corporate taxes, just the one, we are amongst the highest in the world. Absolutely. In terms of an effective corporate tax rate, which takes into account your exemptions and everything else. That is amongst the highest, about the third highest in the world. This is now OECD data, and, if you will, Shackleton the academic studies. In terms of effective corporate tax, which Pratap is concerned with, and not the overall contributions, we are amongst the highest in the world.
Well, that's not the number I have, but anyway. Yeah. Anyway, let's move on.
Which is why there's no investment going on. Have you guys ever thought about why corporates are not investing?
They had the same rate of tax 7 years ago and they were investing. Anyway, so going to the private sector point, I think that's very important because the private sector is, I'm not trying to suggest, I don't know what Pratap thinks, that the private sector is locked in some kind of unholy compact with itself to exploit the government and everybody. There is, I think, a historic unholy rent-seeking compact between the private corporate sector and the state. There I completely agree with Pratap. And we have had to bear very tellingly the negative consequences of that compact over the last, well, till about 2012, 2013. Now, what the government is trying to do, I think, is clean it up, but it does not know how, because that cleanup on the assumption that you took the private sector at face value and what they wanted was capitalism would be possible. But I do not find the private sector cooperating on capitalism. What I find the private sector doing, and I've seen this with GST, is arguing for more of the same, that is more rent seeking. So I think it's not demonizing the private sector, it's saying that there's a compact between the private sector and the state, and that needs to be rethought, and regrettably the state's ability to do much about it, I don't see that happening yet. I think the intention is there, but that has not happened. And of course, if you ask Mr. Aditya Birla, Mr. Tata, then you look at their, I mean, it's so obvious. They think it's a great budget. I mean, you really think they think it's a great budget? Of course not. They didn't get any but they'll say so because they understand the feudal nature of the relationship with the state. They'll do their deals with the back door. That is what I think the government is trying to change, but unsuccessfully. Your question for me is a very good one, but is contingent on an understanding of what are the impediments to single taxation generally. So we can ask that in two ways, which is, why do states, knowing that these differences occur, willfully maintain differential rates of taxation? Why does, just take alcohol, why does Delhi charge, why do you get cheaper alcohol in Delhi compared to Uttar Pradesh, when Delhi knows perfectly well, and Uttar Pradesh knows perfectly well, the consequences of that? The answer typically is one, entropy, and two, lack of trust. Put in economics terms, it's a game of chicken. And I think in the entire GST negotiation, what you actually saw was a game of chicken, which was being played out in the most, I thought, ill-informed way. One example of that was Tamil Nadu's proposition. I hope Krishnan is not here. He'll kill me. Tamil Nadu's proposition that, oh, we are a producing state, and therefore we are going to lose out on GST, give us compensation. Right? That reflects a lack of, and everyone bought it. Why did they buy it? Our study, my own study, in fact, personally showed that the total consumption of 4 cities in Tamil Nadu, Trichy, Madurai, Coimbatore, and Chennai, was greater than the total consumption of the state of Bihar. Other than the state of Gujarat, high production states are high consumption states. So the answer to your question, normally I have found in the limited work we have done, lies in specific state political economy. There's a state-specific issue where the government either wants to screw a contractor or to reward him or her that causes tax rates to be put in certain ways. And until that political economy changes and people begin to see that there are positive sum gains from not using taxation as an instrument to settle internal political settlement disputes, this is going to continue.
Okay, Shekhar, you want to come in? Okay, Shanti? No. Yeah. Ajay?
Well, I just want to respond to Surjit saying that I was not arguing for a higher corporate tax rate. When I presented the slides, it was showing the corporate tax rates across countries, and India is not the lowest amongst those countries. What I was arguing for in the presentation, and I think Rathin refers to this, is that somehow we have to try and break this alliance between the state and the private sector that sometimes gets recognized or perceived as an unholy alliance, and it does exist. I mean, we can't kid ourselves. But it's difficult. How do you break that? I mean, one is, of course, to improve institutional capacity. The lady referred to, institutional capacity both at the local level, state level, and the central level capacity. But when you go down to the state and the panchayat, the municipal level capacity, I think, begins to fall. There may be exceptions in cities and municipal. But the point I was making is institutional ramp up, which almost a no-brainer. but also the fact that do we have an idea of how much, and this kind of reinforces the point that you're making, is that what does it cost to pay taxes? I mean, I'm paying my tax X%, but to pay that X%, what does it cost me? And it's not a small number. And this is probably over and above the 61% that you're talking about. It doesn't, the 61% doesn't include the transactions costs that I incur in paying taxes. So, and what I'm arguing for is that can the government, can the department, NIPFP replicate that study which was done in 2002, which was only done for direct taxes, corporate and individuals. What are the compliance costs of paying taxes in India? Are they small? Are they large? And can we do something to address them? I.e., a more friendly tax administration, but a not corrupt tax administration, a more friendly tax administration, and a large taxpayer unit which is transparent, institutionalized, and accountable. And I think our tax to GDP ratio will go up.
Okay, Pratap.
So it's not about demonizing the private sector. We're all market liberalizers. But there is an institutional relationship between the two that Ratin has said. And in 20 years of studying that history, I have not seen the private sector take a credible stand on proper regulation. You can go example after example. I mean, it's just not a philosophically, intellectually, institutionally mature private sector. This is not, in old Marxist terms, right? It hasn't learned to be a sophisticated class for itself. It is a creation of the state and continues to. And look, capitalism always derived its social legitimacy from two things, right? One, can you generate wealth across wide sections of the population, right? Right? Two, do you play by relatively fairer market rules, right? Not pro particular business. And three, do you create a kind of enchantment around new products, around new technologies, around, the animal spirits in the truest sense of the term. Take all those three measures. Where is Indian capital? Right? There are no icons left. Its internal corruption story is huge, huge. I mean, we talk about lack of institutional reform in the state. Geez, look at the corporate sector, right? That's the core credibility problem. It's always lobbying for the wrong things, as it were, right? It wants the cheap land. Now, second part, which is where I think the redistribution story is interesting, right? So one way of looking at this moment is we want to make this big push from informalization to formalization, right? Because we think there'll be productivity and efficiency gains. I'm actually very worried about what this will do to our society and economy. Not because I don't like formalization, all the arguments for it are perfectly right. Because of one particular reason, which is you can think of formalization as a form of raising entry barriers into the economy, right? Formalization happens in all kinds of ways. It's not just formal payments. It's, do I need a formal license to come do hawking in Delhi? Do I need a formal license to sit by the roadside and sell vegetables, right? One of the reasons India has actually remained relatively stable, I'd submit, I mean, there's unintended consequences, is actually the informal story. Because whatever else might be the case, the entry barriers to doing whatever you did at your level, right, were actually relatively low. I can't produce a 5-star rated, A-graded certified fan, but I can, put something in my, right? What has happened in the last 10, 15 years is that under the name of formalization, right, a lot of those entry barriers are being raised without recompense, right? So today, just take a city like Gurgaon, right? We're talking of infrastructure, we say whose capacity, right? If somebody has to just set up a shack ironing clothes, probably has to pay effectively more penalties entering that market. And then you have the corporate sector saying, well, by the way, we want an SEZ, right? Both are businesses, right? Right? But this idea of slum-free cities, right? What is it? It's an eviction of business, right? So the corporate sector's fantasy, the big corporate sector's fantasy that there's a kind of SEZ model at the risk of excluding what you might call real entrepreneurs, right? That conflict is very real in Indian city. We talk about capacities, last point I'll make, agree, absolutely, right? But look, first of all of us have to remind ourselves that we are still a very low income economy. You'll get the state capacity, you get commensurate to your, I mean, there's a right? Yeah. I mean, we benchmark immediately to, first world standards, we don't have that, that state capacity. But the question is, who should bear the brunt of that state capacity, right? Are you going to seriously tell somebody, sorry, you cannot get pakka housing because we lack state capacity, right? Or, and that's where you have to, in a sense, begin at the other end of the spectrum. This is, technically, the big guys should be easier to regulate, right? It should be easier to, in a sense, impose cost on them that, that allows them, right, to internalize the cost of those externalities. Look, you've ended up with the filthiest air and the dirtiest water in the world, right? What is industry lobbying for? Gutting every environmental regulation. Who are the big players? The big players, right? Now, this is a fundamental architectural question. 1991 completely, blew our minds. We just kept talking about deregulate, deregulate, deregulate. When did the corporate sector come forward and say, here is the golden mean, we are willing to work with you in creating sensible environmental regulation so you can internalize all the externalities you're imposing, right? Why does India actually have this messy public transport system we do? Right? Some days the history will be written of what big automotive lobbies did to India, the Indian transport sector, right? So this is a plea not against the corporate sector. It is capitalism will have to be safe from capitalists. And what I see happening is the state is actually more likely on the path of reform than Indian capitalism. It's still expecting 19-20% return. That's what all these negotiations are about, right? You say you don't have, the point Raghuram Rajan made about the real estate sector, right? Nobody was willing to drop prices, right? What is that telling you? So, kid me not, there is a fundamental structural contradiction in the way in which big capital has thought of its place in this. And if you want a market society, you'll have to be equally harsh on them. The state has become an easy alibi for most of us because the state is there, it's at least democratic, those politicians at least listen to us, they are patient, right? That is the issue.
Okay, I think we have time for 3 more questions. I think there's one question here. I'm sorry, we'll not be able to take all the questions. So with 3 questions, then I have to pick and choose 1, 2.
Ashok, a very brief comment because this is about the number of jobs we need to create, and then I have a question for Rajat on the budget and inverted duty structure. Everybody and their uncles seem to believe that we add 1 million people to our labor force every month. That means 12 million jobs have to be created every year. This has not been true since 2004-5 to 11-12. We just added 2 million people to our labor force. Now, between 11-12 and now, we must be adding about 5 million per annum. And these are young people who are much better educated and therefore will only look for jobs which are non-agricultural and non-construction. Why did I mention construction? Because 5 million people have been leaving agriculture for the last 10 years and they will find their jobs in construction. And it is very good that the budget is focused on infrastructure and especially in rural infrastructure. But this raises a question about, are we going to be able to create jobs in manufacturing, which remains the million-dollar question, which brings me to the inverted duty structure point that I wanted to make. You know, this government inherited inverted duty structures where finished goods were getting a tariff much lower than intermediates or raw materials for domestic value addition. So as a result of that, in 2014, capital goods, textiles, electronics, chemicals, aluminum, a range of industries were suffering from inverted duty structure. Thankfully, auto has not. And because auto has not, auto now constitutes 45% of gross value added of entire manufacturing in our country. And thankfully, in the first budget of this government...
Can you be brief? Can you just come to the question?
I'm finishing. Electronics, the inverted duty structure began to change, and we are beginning to see the impact of that in the last 2 to 3 years already. There have been some changes in the inverted duty structure if you look at Annex 3 in this budget. How do you assess that, Rajat? I'm not saying changing the inverted duty structure is suddenly going to increase jobs massively, but it will certainly increase jobs in the organized sector, which will have, you know, sort of tier 1, tier 2, tier 3, which are all in the unorganized sector, where jobs will get created if they are connected to
the... This question, please go ahead.
Hi, my name is Ratnakar. I'm from South Asian University. I have a question on this transparency thing that we talked about in the political funding. So they are talking about that to make it more transparent, like if you are donating more than 2,000, then it should be through the formal channel. But it's in terms of only funding, the funder when they will fund it. What about in terms of their expenditure? Because if we see the political party is spending their money in the election campaign, then if that is very much transparent, then you can find the corruption over there very easily. And my question, I'm sticking to the question which is in the agriculture credit. So looking at the P. Sainath work, he talked about that most of the agriculture credit is not going to the farmer in the rural setting. These are going to the farmer in the urban setting. So what's your take on, like, any of you, like, on this? Is this the growth of the pro-poor growth in the India that Prime Minister talked about in his very first speech?
Okay, the last question there.
Good afternoon, sir. I'm KJ Chaudhary, Chief Commissioner from the Excise, Customs and Service Tax, looking after the 4 northern states of India. We collect about 16,000 crores. So my experience is, out of this 16,000 crores, my case is, in a nutshell, for GST. Out of this 16,000 crores, which we collect through all methods, anti-evasion, preventive, auditing, scrutiny, whatever you apply, it is never more than even 2% or 3% of the total all revenue collection. So first observation from this is that it is the compliant people who are contributing more rather than the preventive operations. So controls and all are not serving, probably because the tax base is high. Off the record, I can't say how much is the evasion, but we know it is quite high. Now, my observation with 31 years of experience is that everybody appears to be right, everybody has a view here. But in GST, once we come, everything, the catch point there is that on input side and output side, everything has to be put on the internet, computer. Only then you will be able to take credit. Just to give you a small example.
Can you be a little brief?
All that I'm saying is, we have to go in for computerization and we have to support the GST. We are under the mandate from government. We have already got 50% people shifted to the GST, this thing. Many problems will get over and GST has to be supported through this forum and we should go ahead and get the registration.
Okay. Thank you. Thank you. Yeah. Go ahead, please. Yeah, sure.
Just a comment on the job question that you were asking. I'm not going to presume to answer your question, but this is also, obliquely what I was referring to. If you look at the 7% growth rate, you cannot have growth rate without jobs getting created. You cannot grow without producing more, and you cannot produce more without employing more inputs, and labor input is one of the critical components. So this is economic theory. Now, if we are all concerned that jobs are not getting generated and there is a huge problem on the one hand, on the other hand we have a 7% growth rate, I think we need to think about this whole job creation process. This is the inclusive growth that I was talking about. It's not happening. You look at services sector, IT sector cannot, it's not really labor intensive, right? It's not a job creating kind of sector. So, but it shows phenomenal growth. Manufacturing sector, costs are rising. Uncompetitiveness is actually in the offing for the Indian manufacturing sector in several subsectors. And so where are the, and now the rise of the conservative government in the United States is posing further problems. Rajat talked about how exports are falling. So where are the jobs going to come from the manufacturing sector? Now we are looking at agriculture. Agriculture has a good year every 3 years. Then they hire people. So the other 2 years they have either a drought or a flood. So this is the problem that we have to address. So I think the way forward for, given the numbers, etc., the way forward, and I completely agreed with the argument that Pratap was putting forth about how capitalism has to now, think about itself and think of its role, and how we should get away from asking for SOPs, this mommy, please give me a excise duty break so that I can sell more. Why are we depending on government SOPs for survival?
Okay.
That should not be the attitude of the corporate sector, and unfortunately it has been the attitude of the corporate sector for a very long time.
Okay. Rajat, you want to?
Sure, yeah. No, absolutely, Santosh. Your characterization of the inverted duty structure is absolutely right. And who can forget the images of people bringing in, when they came in from Hong Kong and Singapore, televisions, and you could see those on a conveyor belt. And then we signed the ITA 1. Which is the Information Technology Agreement, where we imported components zero duty. There was no duty on components. They came in zero duty, which led to a rise of what we see now is an industry which assembles. This is much like the Apple example that the OECD quotes for China, where the value added locally is only 6%, while most of the value addition is going to design in the United States and the chip makers in Japan and Korea. But signing the ITA 1, and there's been a lot of discussion in India, signing the ITA 1 kind of encouraged assembly, but didn't encourage production. And therefore, you need to kind of now think of, because of the inverted duty structure, and I haven't looked at Annex 3 carefully enough, but there is an additional duty being placed on a component that is a significant value of the entire electronic end product, which is your handset or a telephone, which is the printed circuit board. And they are going to impose, they're proposing to impose a 2% duty. Whether that would be enough to kind of encourage localization, and then events just might take over what the government has proposed in this, because when the GST comes, everything will kind of become a part of the GST, and then the assembly will also be under threat. I think even the assembly industry within India could be under threat, because then you could import a cheaper end product handset from China or East Asia, cheaper than what it takes to produce it in India. So GST could have an impact on, in a sense, the benefits of inverting the inverse duty structure could get overcome or overtaken by events that would happen unless we do something to renege on some of our commitments that we've made in multilaterally. And the handset industry, I know, is lobbying with the government to try and impose additional duties and to kind of renege on the commitments that have been made in the ITA 1.
Okay.
And we are not signing the ITA 2, which includes end products as well.
Fine. Thank you. Shekhar, Rathin, you want to come in here? Nothing. Okay, I think we have come to the end of this wonderful session. I began with the analogy of an onion in the morning. And indeed, it seems that the second layer, which has been peeled off, is a little different from the first layer, which is as it ought to be. But let me, I did it last year also. And let me end this discussion, because it's very difficult to sum up this kind of a rich discussion in one or two broad points. So let me get the audience, since there are many of you who wanted to ask a question, and this is your turn to take part in this meeting. I have 5 questions which I had raised, and let me see what is the House opinion on those 5 questions. Those of you who are in favor of it should raise your hands. So the first question is, will this budget revive investment and growth? Those who believe yes, it will, should should raise their hands.
This includes the...
Yeah, this includes the economist. Okay? Okay. Okay. Well, number two question is, has this budget taken the tax reform agenda forward? No. Okay. Has the budget tackled the adverse impact of demonetization? No. Okay. Does the budget address corporate and banking stress? No. Finally, is this budget overtly political? There are quite a few people, yes. So it's an interesting verdict wherein nobody thinks, I mean very few except 3 or 4 maybe, who thinks low turnout. Or are they leading questions? So it seems that the verdict is this budget probably could have done more for investment and growth. Certainly the expectations on tax reforms have not been met. And in terms of tackling the adverse impact of demonetization, it falls short of expectations. And for banking sector and corporate stress, not much has been done. And finally, it seems it is a little bit of a political budget which addresses political concerns of the government. So with these words, let me call halt to this session, and I think we advising us people. I hand it back to Rathin to do the honors.
Well, I'd like to just take a minute to thank the team who helped us organize this. They're right at the back. We have teams from all the 5 institutions. This year we sort of led the organization, but Hani was in charge of the team, and Arunodaya outside as SAO. Thank you very much. I'd like to thank the Taj Mahal Hotel for expanding its catering facilities and its providing us an extra room at very short notice, because we were heavily oversubscribed. There were 274 people here when we started at 10:45. So thank you to the hotel. Thank you to our moderator, A.K. Bhattacharya, for his usual aplomb. And very importantly, thank you to our partners, the World Bank, for having, again, quietly in the background, brought this 11th 5 institutions seminar to a close. We value your support and collaboration. Thank you very much. And thank you to all of you for being such a great audience.